investasi di Bibit memang senyaman ini. Sampai bisa ditinggal tidur. Dengan aktifkan SIP, investasimu jalan otomatis. Kamu bisa tidur pulas dan dapat return optimal. Shh, jangan ganggu. Mending aktifin SIP sekarang. Tidur lebih nyenyak, lebih tenang. Karena investasi reksadana di Bibit. Dengan berbagai pilihan produk investasi di Bibit, beli reksadana berkualitas. Yang optimal, kembangkan uangmu sesuai dengan profil resiko. Kamu juga bisa beli SBN dan obligasi FR. Investasi 100% aman, dijamin negara. Return pun lebih optimal. Bikin cuan makin berkembang, investasi di Bibit sekarang.
Lagi serius-seriusnya analisa saham, malah dikerjain sama aplikasi. Seriously?
Trader saham seserius kamu butuh aplikasi yang serius. Pakai Stockbit, data selalu real time, trading saham jadi bebas ketinggalan momentum.
Good morning, ladies and gentlemen. Good morning. Yeah. Welcome to this exciting event organized by CFA Society Indonesia in collaboration with Stockbit Bibit. My name is Luwih Capital. I will be your MC for today. We are honored to welcome our distinguished guest, Mr. Triyono Sudirjo CFA, Vice President of CFA Society Indonesia. Good morning, Pak. Mr. Rahmat Sugiono Halim, CFA, Executive Director of CFA Society Indonesia. Yeah. That's a little bit late, but that's fine. Miss Vivi Handoyoli, CFA, Head of Investment Research at Stockbit Bibit and Coordinator of the Indonesia CFA Institute Research Challenge. Mr. Woody Warsono, CFA, Coordinator of the Indonesia CFA Institute Research Challenge and Commissioner of Sukor Sekuritas. Mr. Sebastian Tobing, CFA, ya Pak, Coordinator of Indonesia CFA Institute Research Challenge. Our esteemed judges, Mr. Tigor Siagian, CFA, Director at Bank Indonesia. Mr. Herman Cahyadi, CFA, Chief Investment Officer at BRI Management Investasi. Mr. Raja Aulia Reza Abdallah, CFA, Director at Arumni Foods Pty Ltd. We also extend a warm welcome to all mentors, finalists, and faculty advisors. We appreciate your presence here and look forward to an inspiring and competitive session. Without further ado, let's start with some opening remarks. To officially open today's event, please welcome Mr. Triyono Sudirjo, CFA, Vice President of CFA Society Indonesia.
Selamat pagi, ladies and gentlemen, esteemed judges, faculty advisors, mentors, and most importantly, our talented student participants. Assalamualaikum warahmatullahi wabarakatuh and salam sejahtera. Good morning and welcome to the 19th Annual CFA Indonesia Investment Research Challenge. It is an absolute honor to stand here before you today as we gather one of the most prestigious student competition in Indonesia in the area of investment and finance. This year is truly special because we have a set new record of 41 teams from 23 universities. This is the highest number of participants in the history of this competition. This is reflecting not only the growing enthusiasm for the CFA Institute Research Challenge, but also the increasing quality and caliber of young investment professionals emerging from our universities. I would like to also extend a warm welcome to all universities joining us today, especially those that have been continuous participants year after year. Some of the universities are a regular finalist. Congratulations to all of you. And then also beyond the national recognition, this challenge is also a gateway to global stage. Needless to say, a lot of our finalists have made a good career progression to the global and regional stage as well. 2 years ago, for example, University of Indonesia made us proud because they advanced beyond the regional finals into the global finals. This year, we hope we have more participants following their footsteps and go even further, hopefully representing Indonesia in the global final in Chicago. I encourage all of you to give your best and seize this opportunity. This competition would not be possible without dedications of many individuals. So heartful thank to faculty advisors, mentors, graders, and university PICs. Lastly, we also deeply grateful to our sponsors, Sukor Sekuritas, Stockbit, Kaplan. Your partnerships allow us to continue providing this platform for learning, networking, and professional growth. To all the finalists, congratulations for being able to make it this far. IPMI, Prastia Mulya, Universitas Surabaya, Universitas Indonesia, UPN Veteran Jakarta, and ITB. You are already among the best. Now it's time for you to showcase your hard work, sharpen your analytical skills, and most importantly, enjoy the experience. Best of luck dan selamat berlomba. Terima kasih.
Thank you, Mr. Triyono, for your insightful opening remarks. Next, we have a speech by representative from Stockbit Bibit. Please welcome Ms. Vivi Handayonoli, CFA.
Hello, good morning, everyone. Thank you for coming to our office today. And this is our first time hosting this competition, and we are very honored to host one of the most prestigious competition for the finance student in Indonesia. So to introduce myself, I'm Vivi. I'm the head of investment research in Stockbit and Bibit. And maybe for those who are not familiar with Stockbit and Bibit, I just want to give a little bit of a background on who we are. So for those who don't know, Stockbit actually started in 2013, and we actually started as an online forum for stocks. And then in 2019, we launched Bibit, which is platform where you can buy mutual funds, and one of our main features that has not been introduced was robo-advisor back then. And then in 2021 we launched our trading, which is Stockbit Sekuritas. So we have come a long way, but throughout all those years during launching of Stockbit and Bibit, if you look at our products and our marketing, we have always tried our best to increase the financial literacy to all new investors. So this competition is also part of our initiative to be able to improve the capability of the students in Indonesia to see how it actually is when you do research in the capital market. So, and as a company, I think we are also, we value innovation a lot when we do our content and our product. So we hope that in this competition, we will see a lot of interesting arguments and theses from the participants today, and in terms of your investment thesis. So thank you for the opportunity of hosting this competition today. I'm really looking forward to hear all of the investment pitch that we'll hear today. Thank you.
Thank you, Ms. Vivi, for your support and partnership in this event. Now, let us hear from Coordinator of Indonesia CFA Institute Research Challenge 2024-2025, Mr. Woody Warsono, CFA.
Thank you, Luisa. Yang ini ya. Oke, selamat pagi. Ya, senang banget buat saya juga bisa ketemu banyak idola-idola saya di sini ya. Dari tim juri, ada Pak Tigor, Pak Herman, Pak Raja, Pak Triyono, thank you so much. Pak Rahmat, dan saya nggak bisa sebut satu-satu. Thank you, Vivi, for hosting this. Teman lama saya, Sebastian. So, iya, nggak gampang untuk ketemu Kak Yunif, Kak Gary. Nggak gampang ya untuk ketemu orang-orang hebat di capital market kayak gini. Dan saya di sini hari ini mewakili panitia CFA Research Challenge, diminta oleh Pak Rahmat untuk kasih 1-2 patah kata, dan tentunya saya siapkan materi tentang plus minus untuk ikut CFA Research Challenge. Next-nya yang ini ya. Yang ini? Oh, oke. Oke, next. Oke, jadi materi ini saya siapkan, dan tadinya rencananya saya mau bikin sedikit icebreaker gitu, dengan melontarkan pertanyaan ke WhatsApp group, baik mentor maupun participating students. Kira-kira ada peristiwa lucu, seru, memorable mengenai persiapan ikut CFA Research Challenge. Interestingly, dari mentor dulu ya. Dari mentor mereka bilang yang ada cerita lucu-lucu ironis gitu. Dalam arti mentornya itu lebih sibuk ngejarin studentsnya daripada kebalikannya. Padahal kita tahu mentornya orang sibuk ya. Tapi of course 7 tim yang hadir di sini bukan tipe yang harus dikejar-kejar, saya yakin itu. Kalau dari segi studentsnya, nggak ada respon sama sekali. Sebenarnya nggak mengagetkan ya, karena industri kita, finansial, stock market itu dianggap industri yang super duper serius. Jadi dalam konteks kayak gitu settingannya harus serius, nggak ada tempat untuk humor, nggak ada tempat untuk tertawa, nggak ada tempat untuk jokes. Karena hal ini, saya pikir saya mau rubah presentasi saya, dan saya akan scrap presentasi ini, tolong materi 2 ya. Dan pagi ini saya mau bicara sedikit tentang pentingnya kita untuk punya sense of humor. Pentingnya kita untuk nggak lupa tertawa gitu. Kenapa begitu? Oke, let's talk about it. Jadi penting buat Pak Rahmat ini minta maaf materinya jadi kayak gini. Ya. Kita nggak lupa tertawa itu penting ya. Nah ini hari Selasa saya kirim ke WhatsApp group, sampai detik ini nggak ada satu respons pun. Ya. Next please. Oke. Interestingly tahun 2019 Harvard Business School bilang bahwa 58% employee itu tidak mempercayai bosnya. 58% ya, mayoritas. Benar-benar nggak lucu sih ini. Bahkan mereka lebih percaya complete stranger daripada bosnya. Dan ini tentu kabar buruk. Kenapa? Karena tanpa ada trust, kita tahu, yang pernah berorganisasi pasti tahu kalau nggak ada trust, performance-nya akan langsung menurun. Next please. Oke. Kenapa humor itu matters? Karena humor itu salah satu solusi paling gampang untuk seorang leader, seorang anggota organisasi untuk disukai, bahkan dihormati. Kok bisa? Ya, karena humor itu benar-benar boosting yang namanya koneksi, yang namanya kreativitas, yang namanya psychological safety, yang namanya productivity, dan trust. Jadi luar biasa banget ya kombinasinya. Dan yang nggak kalah penting adalah humor itu bukan cuma untuk komedian. Jadi ini salah satu resep kalau nanti mau berkarir, jangan terlalu serius. Saya ngerti bahwa kita di dunia keuangan sekali lagi persepsinya adalah dunia yang super duper serius. Dan tidak ada yang salah dengan taking our job seriously, harus bahkan ya. Nggak ada yang salah. Tapi yang salah adalah taking ourselves too seriously. Kenapa gitu? Karena kita semua yang di market pasti tahu, pasti mau mengakui bahwa kita pernah salah. Yang bilang nggak pernah salah, itu cuma ada di dunia fantasi. Jadi, karena kita pernah salah, kita mau belajar dari kesalahan kita mau bertumbuh. Kalau kita mau menerima kesalahan kita dan kita mau bertumbuh, resep utama adalah do not take ourselves too seriously. Next please. Oke, dan kita tahu bahwa kalau kita datang ke ruang meeting, begitu ada psychological safety, begitu ada ruang aman, meeting itu cenderung mengalir dengan lebih natural. lebih ada kemungkinan terjadi inovasi, bahkan mungkin ada visi baru. Dan dari sana produktivitas itu akan cenderung untuk naik ya. Next one please. Oke, last page, the science of humor. The science of humor. Mungkin sebelum saya discuss ini sedikit, boleh tahu nggak dari participants yang umur 23 tahun ke atas siapa ya? Nggak ada ya? Nggak ada ya? Oke, so ini beritanya. Nggak tahu ini berita bagus atau berita jelek, tapi Gallup itu pernah melakukan survei. Survei ini luar biasa masif. 1,4 juta responden dan 166 negara. Jadi of course universal ya, universal. Dan surveinya mengatakan bahwa begitu menginjak umur 23 tahun, ingat angkanya ya, 23 tahun, maka frekuensi tertawa, bahkan frekuensi tersenyum itu langsung kolaps. Studi lain menunjukkan bahwa anak umur 4 tahun itu tertawa 300 kali sehari. Kita orang dewasa tertawa 15 kali sehari. 300 ke 15 ya. Kalau orang market mungkin 5 kali ya. Jadi 300 ke 15 itu turun 95%. Kalau kita bicara saham itu bukan turun ya, itu crash. Jadi kenapa ini terjadi? Mungkin karena tekanan psikologis, karena beban kerjaan, dan mungkin karena sekali lagi kita dituntut tampil profesional. Artinya apa? Jangan terlalu sering ketawa. Tapi kerugiannya banyak, advice jangan terlalu sering ketawa ini. Kenapa? Karena secara saintifik dibuktikan bahwa tertawa itu rilis beberapa hormon. Endorfin, dopamin, oksitosin, serotonin. 4 ini hormon happy ya yang dirilis. Bayangin, 4-4-nya langsung di cover cuma dengan tertawa. Ada satu hormon lagi, kortisol. The good news adalah dengan hormon kortisol ini ternyata tertawa itu menurunkan kortisol. So, nggak ada downside-nya, kita lihat dari segi ini. Bahkan, this is gonna be my last bit. Humor itu bisa dibandingkan dengan 3 aktivitas sekaligus. Exercise, meditasi, dan intimacy. Seks ya. So, doing these 3 things at the same time. Why not? Jadi nanti kalau lagi presentasi, kepingin buat lebih light, kepingin ada humor, go ahead. Nggak usah sungkan. Thank you.
Thank you, Mr. Rudy. Jangan lupa tertawa ya teman-teman. Okay, before we begin the competition, let's go over the rules. Please welcome Mr. Sebastian Tobing, CFA, who will explain the competition rules.
Oke, thank you. Walaupun sebenarnya ya pasti semua yang datang ke sini udah pelajarin rulesnya dari luar dalam kali dari kemarin-kemarin. Oke, next. Sorry, ini iya. Let's see. Oh, sorry. Pakai Siri aja kali ya. Oke, jadi mungkin sambil nunggu kita berpantun dulu lah ya. Ya. Oke. Pagi-pagi makan nasi. Pergi ke kantor baju rapi. Oke, hari ini kita berkompetisi. Setelah itu ngopi-ngopi. Ya, ini itu pantun. Kalau ada pantun tuh CFA level 4 ya. Yeah. Okay. Next. Ini harusnya sih udah tahu ya kira-kira. Ini kan anyway semua udah disampel ya 3 to 5 students with mentor. Next. And next. Okay. Well, ini kayaknya pesan sponsornya kita nggak boleh lupa. Jadi thank you tentunya untuk ya Stockbit terutama menyediakan tempatnya ya. Sukor Sekuritas tentunya Pak Budi, saya Kaya dan juga dari Kaplan. Thank you. Next. Dan juga dari Indonesia Research Challenge Final Teams, well juga mungkin saya just wanna say congratulations again ya. Udah mencapai di tahap ini dari sekian banyak tim dan memang ya saya salah satu dari judgesnya itu ya lebih tipis-tipis sih bedanya. Jadi memang kalau dari judges yang lain bilang untuk tahun ini lebih jauh lebih sulit. Jadi congratulations again untuk telah mencapai di tahap ini. Thank you. Next. Di sini mungkin nggak ada dari Cimori ya, tapi gimana pun kita juga grateful untuk Cimori udah tentunya menyediakan waktunya untuk kita juga waktu itu Zoom call dan jadi kita bisa menganalisa ya. Next. Oke, ini jadi yang paling penting tentunya jadi 10 menit ya time limit untuk presentasi. Juga 10 menit untuk Q&A. Jadi nanti kalau jawab ya di kira-kira lah waktunya kalau supaya mungkin ada waktu juga supaya ada beberapa pertanyaan ya. Silent time remindernya itu di 2 menit dan 1 menit ya. Jadi nanti ada ya seperti itu ada akan diangkat jadi supaya bisa melihat ya. Kalau sudah tinggal 2 dan 1 menit ya. Dan nanti juga akan udah ada announcement-nya times up kalau memang sudah benar-benar selesai. Dan kita juga winners akan decided by today's presentations. I believe nanti kan setelah ini ada lunch. Setelah lunch itu diumumkan ya. Ya. Jadi ya nggak perlu deg-degan terlalu lama, bisa langsung ya. Ya bisa langsung tahu. Dan ketika lunch nanti itu judgesnya mereka akan diskusi sendiri. Jadi nggak bisa lobby-lobby ya. Oke, jadi mobile phones tentunya ya harap semua dimatikan atau minimum di silent ya. Dan tentunya juga untuk audience tentunya kita semua akan respect dan kalau ketika presentasi atau menjawab itu kita juga supaya mereka bisa tetap konsentrasi, kita memberi mereka ruang untuk bisa fokus lah. Oke, jadi 2 tim terbaik itu akan merepresentasikan Indonesia di sub-regional round ya di Southeastern Asia. Setelah itu ke Asia ya Pak, kalau nggak salah. Setelah itu baru ke global. Ya, globalnya di mana Pak? Di Chicago ya. Oke. Ya, dan semua biaya dibiayain. Oke. Jadi sekali lagi terakhir ya congratulations sudah mencapai di level ini dan good luck ya untuk selanjutnya baik di presentasi hari ini maupun di karir Anda selanjutnya. Thank you.
Thank you, Mr. Sebastian. Now, we are ready to begin the competition. Finalists who will present, when I call your name, please yell and shout as loud as you can, okay? First one, Adabor Capital, IFMI Institute. Fortis Capital, Universitas Prasetya Mulia. Fortis Capital, Universitas Indonesia. Ganesha Street Capital, Institut Teknologi Bandung. Luwih Capital, Universitas Surabaya. PSB Elites, Universitas Indonesia. Pyrite Research, UPN Veteran Jakarta. Our esteemed judges, Mr. Tigor Siagian CFA, Director at Bank Indonesia. Mr. Herman Cahyadi CFA, Chief Investment Officer at BRI Management Investasi. Mr. Raja Aulia Reza Abdallah CFA, Director at Arumni Foods Pty Ltd. Okay, ready to be seated in judges table. And based on sequence determined during the lots drawing on February 19, 2025 via Zoom, we kindly ask the first team, Adabor Capital IPMI Institute, to prepare for their presentation. Please come forward. The other 6 finalists are invited to step outside, turn off your mobile phone, and leave it to our team. The finalist team will be called back in according to the presentation schedule. To ensure our esteemed judges can attentively listen to the finalist presentations without any disturbances, we kindly request all guests to silence your mobile phone and refrain from conversation during the session. Thank you. Now, let's begin with our first team, Adabor Capital from IPMI Institute. Ready, team?
Ready.
Yeah. You have 10 minutes for presentations. Please pay attention to the reminders from the timekeeper. The timer will start now.
Cimory starts with a simple promise. I only produce what I'd serve my family. We are Adabor Capital and we present our buy recommendation with 12-month target price of 5,600, supported by 3 of our main theses: growth potential, product innovation, and also resilient performance. So Cimory has a strong ownership and also strong management. And GA, as one of their shareholder, proved their private equity trust. And also, as you can see on the slides, that even though they are a family-led business, they are supported by management with years of experience in their own expertise. So now going on to our first thesis, growth potential in Indonesia's transforming food landscape. So as you can see on the slides that the market is changing, Indonesia is changing. There will be urbanization and also lifestyle change and shifting population. Moreover, you can see on the slides that in terms of protein, there is protein gap. Indonesia is still far below the average of Asia. Since then, The lifestyle has changed, and the post-pandemic evac, long commutes, busy lifestyle has made the shifting in consumer preference. However, we believe that Cimory is ready to meet this kind of demand. As you can see, our analysis of their affordability, nutrition, and also convenience, they are proven that they are good with their peers. With Indonesia being one of the fastest emerging markets with an evolving food industry, this is how Cimory sustained their sales and innovation to meet demand. So first, not only do they innovate across the dairy segment and the consumer food segment, but they also innovate across different segments such as their flavoring, packaging, and their distribution expansion. Now with the highly anticipated launch of its plant-based product line in 2025, according to CFO Bharat Joshi, it's going to set Cimory with another wave of revenue growth. Besides that, they also have the aggressive distribution strategy across MT, GT, and their innovative Miss Cimory program. Now, according to our interviews across plus 10 retail sellers in general trade, we found that these sellers are required to purchase Cimory products upfront before selling them to the customers. As a result, they need to leverage the Miss Cimory program to penetrate the underserved areas, as this program will, because the GT will enable them to penetrate. Now, aside that, they also have production facilities in Sentul and Pasuruan, in reinforcing their stronghold in the Java Island. However, to expand beyond Java, they're also adopting a 100% digital marketing strategy in order to penetrate the younger consumer base.
Moving on, our analysis highlight company resilient performance. Cimory already outpacing FMCG peers in terms of gross profit margin and revenue growth within 5 years. Company set the margin guidance within this year 42 and 44%. One of the factors that's supporting Cimory sales is because of their product innovation. Cimory has launched the most product against its peers since 2020. Another key factor is that Indonesia has improved purchasing power and in effect on convenience food and also product availability. Cimory sees the opportunity to expand more on dairy and also frozen food. Moving on, Cimory also have rapid market share expansion. With $1 billion of market in milk, yogurt, and processed meat, Cimory is also carries all of the market around the years. They gain 2% of market share each segment every single years. And also, Cimory have remarkable resilience to managing their average selling product. Their product portfolio is having their convenience size in every size that they have, in dairy and also consumer food. They also have premium product, meaning their nutrition is higher than a lot of peers at economical price. To boost their sales, Cimory have boosted their advertising and promotion tools to more than 2.4 trillion. It results 52% average revenue in the 5 years. Cimory also have strong financial foundation for the expansion. They have more than 2.4 trillion cash to expand to increasing capacity productions, consumer spin-off, and M&A. It could lead to the EBITDA margin increasing in the next years. And lastly, about program Makan Bergizi Gratis, our analysis see that on average, the program sources is from Miklaf and Tango. Cimory is unlikely to be benefit of Makan Bergizi Gratis due to their premium nutrition and also premium price. Another thing is that Cimory 80% is coming from abroad, while the government is seeing that the Makan Bergizi Gratis is coming from sources from the local. They want to increasing the milk consumption, so they want to have a company who has sources in the local.
Building on the key factors that I've discussed before, we believe that Cimory's premium valuation is driven by its exceptional growth. Through our analysis, we have applied the cost of capital, incorporating the cost of debt into our calculations. Since Cimory had no long-term debt in the last year, we assume a zero debt to capital ratio and using the average prime lending rate for corporate credit, which stood at 8.21%. Additionally, we also factor in macroeconomic influences, such as inflation, Bank Indonesia rate, and also the exchange rate using the arbitrage pricing theory. Our findings highlight Cimory's strong financial position. Using the discounted cash flow model, we have set a target price of 5,600 rupiah. We also conducted a sensitivity analysis, which the results were impressive, a 56% initiating to buy and not even a single initiating to sell. Even in our Monte Carlo simulation, only 3% of cases pointed to sell, reinforcing that Cimory still has a solid potential to be at least a hold. Beyond that, we also explore risk and opportunities upside through our scenario analysis. In our best scenario, we focus on Cimory's idle cash utilization, which refining its capital structure. And we have a strategy spoof like business operation and also M&A, synergistic M&A, which can enhance its market position. Additionally, we also suggest to spin off its consumer goods, which this is a value unlocking mechanism for the company itself, which can optimize and scale their capital structure. And also, in addition, Chimory aims to boost their capacity production. And through this capital expenditure, Chimory can enabling increased sales and also market share.
By analyzing the local and global peers, we see that Chimory V to EBITDA is expected to decline due to constant enterprise value and the growth EBITDA margin. Then potential ROE that may exceed local peers average by at least 4.6%. Despite the decline in Chimory stock price in early 2025 attribute to short-term profit taking, the company's strong historical performance marked by significant P increase and consistently EPS growth above the industry average. Therefore, we view the price decline as an opportunity for averaging down ahead of anticipated price recovery to the target price level. While we believe in this recommendation, a 1.78% of skim milk powder's price drop could lift them up to 66%, while an increase may lower them to minus 24%. So Chimory mitigate volatility by diversifying sourcing and mitigation the source and the sourcing. And the second risk is the sugar tax, which could increase cost by 1.7% until 2.4%. So Chimory mitigate volatility by reformulating product to stay below taxable threshold if this impact its pricing power.
Last but not least is our ESG analysis. So according to our analysis, they exhibit a commendable score of 3.3 out of 5, which is higher than the average. And these are how they shows their high commitment towards ESG practices. As you can see on the slides that the trend keep going higher, and also comparing to its peers, they are commendable and they always gain more in over the years. And however, we see greater opportunities for their ESG practices. Even though they are already existed in the IDX, SGL, and other indexes, we see a potential for them to enter the Sri Kahati index with the weight, you can see on the slide, the calculation up to 4%. And with that, Chimory could position itself for greater market recognition and also investor trust. So we recommend a buy recommendation of 5,600, and our thesis is clear: growth potential, product innovation, and also company resilient performance. So Chimory has upholds its promise to produce nourishing products for families. We are Adabor Capital. Thank you so much.
Thank you. We will now begin the Q&A session. Judges, time is yours.
Okay, thank you for the presentation. It's really good. I have a few questions here. So can we go back to slide number 7? Slide number 7. Okay. See, very interesting, the chart on the left. So Chimory product is very affordable, but it really has high nutrition, right? Do you think it's too good to be true? Because like, if it's very affordable and very high nutrition, then how going forward they can maintain it? Because like usually like high nutrition, like very expensive. The connotation is very expensive, right? So it keeps like selling of very affordable, but actually something is very expensive. So I don't know like how it's going to be sustainable, because if it's really doable, then everybody is going to do the same, right? So that's first question. Slide 14, please. 14. Yeah, so regarding the new product launches, Chimory is also very good, like adding like 40 products from 2022, 2023. Like, yeah, can you give like some insights, share some insights regarding like how they do it, like how big is the team, like yeah, something like that, so that we understand more about their product launches. And then slide 20. Oh, this is just a very tiny comment. You misspell the writing single factor. Okay, because like if you work in the investment field, or who knows, you join a big bulk bracket. That's very important. Just one thing. Okay. And then going last one, slide 24. Yeah, so this is very interesting. You said that the blue sky scenario, M&A with Lemonilo, and then consumer goods spin-off, increasing productivity, like it will, what, is the share price or the revenue growth? I don't know. So like the 32%, right? But like what I'm trying to understand like is like how many of those 32% is contributed from the M&A and how many percent is from the consumer goods spin-off, you know, the breakdown? Yeah, so those are my questions. Thank you.
Okay, thank you so much for the question. So I will try to answer the first question first. So regarding the nutrition, how they can maintain affordability even though they are considered premium. So if you can see on the slides, so for the premiumization, we assess their price, and for Cimory, they maintain their price will also innovate in their packaging. So in 2023, they tried to make more thin and also sustainable packaging to decrease their cost. And also for their nutrition, we assess it with the nutrition density index. So with NDI, we assess them within their protein, vitamins, and so on. And that what makes them nutritious, even though they are affordable. And why this could be sustainable? Because they always try to innovate not only with the products, but also to develop the flavors and also the sizing. And that's why the average of their price is considered affordable.
For the second questions, could you go to list appendix? List of appendix, yes. Okay. Could you go to appendix? R&D expenses. So yes, 54. So Cimory actually the only company that have R&D expenses. Compared to other peers, they don't have any R&D expenses. The reason why they have 40 plus product is because of they spend more on the R&D sizing. And Cimory sees that Indonesia is having a lot of demand, especially on the variety product. For example, Cimory have a lot of flavor, like a lot of fruit and a lot of chocolate. So it can capture the variety of the audience, even though it's a niche market. So the reason why they can do that is because they have strong cash, but also they spend a lot of things in R&D compared to the other piece that they don't have any R&D expenses.
So to answer the last question, which is the scenario analysis, could you go back to the value waterfall? So this is, first of all, this is actually our pure ideas to give like an option for Cimory, because we know that it is valuable to acknowledge in the long term, in the long run for Cimorys to explore their skills and optimize their capital structure. And as you can see that in our idea scenario, which is the first is M&A with Lemonilo and M&A with Oddly Group. And this why we put this companies, because first of all, Lemonilo has a health conscious product, which is Cimory want to tap into the market conscious health conscious market. And for the second is Oatly Group, which is for secures the raw material plant based. We want to merger with Oatly Group and to have like a better market. And for the consumer good to spin off, it's within 5 years. So it's actually not emergency needed, or it's not urgency immediate, because it's only optional for from us to have like a better perspective for in the long run potential.
Okay, just one tiny comment, yeah. This is no, because the base case is 14%, right? This is just a very tiny comment, but so 14% plus 5 plus 3 plus 4 plus 6 doesn't add up to 32 actually. So maybe like some a little bit calculation thing, but it's just like a tiny comment. But like if a user like reads this, like, and if the user is very detailed, you know, it doesn't add up. Okay, thank you.
Thank you for the input.
Thank you very much for nice presentation. Congratulations to come up in this stage. I think I have 2 questions related to the valuation of the Cimory. And you have made a very convincing highlight about the on the slide 17 about the advantage of having no debt, right? And the strong financial foundation for the cash reserve. Yeah. Many people always often say about the cash is king, right? But in business, sometimes cash is not king. You have to better and good and allocate your capital wisely. So I think I'll ask your opinion about what do you think about this zero debt, and do you think that the Cimory will have any optimal capital allocation strategy, probably in order to maximize the value to the stakeholders, you know, probably by share buybacks or increasing the payouts of dividends. That's my my first question. And the second is related to the ESG. The weight or the component of the evaluation of your report is quite heavily in ESG, right? You have 10% of the components, and I never seen any relate connection of your how do you connect your ESG assessment to the valuation of the stock price. I think this is my 2 questions. Thank you.
Thank you, Pak. Allow me to answer the first question. Can you go to a list of appendix? Appendix 43. So thank you so much for the question, sir. Yes, Cimory have 2.4 trillion of cash. Before the IPO, they get 3.1, which is they already spent 800 billion for the increasing production capacity in Bantul and Pasuruan. We see that the management of the Cimory is waiting for the right moment to invest all of the money to the facilities. So we see that on the dividend payout ratio, we see that 50% of the growth is actually to the shareholders. So meaning that actually Cimory is distributing a lot of cash to the shareholders because the dividend payout ratio is 50%. If we can suggest for the Cimory is we want to accelerate the money to our scenario, which is to increasing production capacity, to the M&A, and also to be spin-off.
So now going on to the question about ESG. So actually ESG matters to how Cimory performs, because for example in the IDX SGL index, they really look into how a company perform about their ESG, and if their ESG is not good, then they won't be able to gain the exposure to the index. And when they have a good ESG comparing to its peers and they enter this kind of index, they will gain more highlights into the investors. And that's why Cimory is quite attractive for especially the investors that is concerning about the ESG.
There's no direct impact to valuation. How you convince me that there's any relation or connection to the valuation of you?
So for in terms of the valuation, yes, it's right that maybe it doesn't directly impact how the price going up and down. However, it's still very important for Cimori to gain their ESG and always increasing the trends, because one of their investors is also GA Atlantics, General Atlantics, I meant, and they are very concerned about how a company performs their ESG.
Thank you. Can you go back to the slide of M&A upside, the value waterfall? Yeah, I saw in your upside scenario that if Cimori acquires Oatly and Lemonilo will add value to the shareholders, but both of the company are still loss-making. They have limited synergy with current Cimori business, and not to mention that they have to do financing in terms of debt or equity if they want to acquire both of them. So how can you be sure that both of them can create value to the company?
Okay, so the suggestion is for beyond the 5 years. We need to see the financial performance for Cimori getting stronger for the next 5 years. So this will be created the value by create the new market for the Cimori, like plant-based from Lemonilo and Oatly from the consumer foods. And for the spin-off, it will be make it the Kanzler more flexible for the market and unlocking the value.
Time's up. Let's give them a round of applause. Thank you, team Adabor Capital from IPMI Institute for your presentation. Please remain seated. Now, please welcome the next team, Fortis Capital from Universitas Prasetya Mulia.
Cek.
Cek, 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 cek. Cek, cek, cek.
Cek, cek. Pointer, next.
Tes, tes, tes. Cek, cek, cek.
Check 1, 2, 3. Check. Hello.
Cimori,
Tes.
Cimori. Cek, cek, cek.
Mic check, please. Thank you.
This.
Ready, team?
Ready.
You have 10 minutes for presentation. Please pay attention to the reminders from the timekeeper. The timer starts when you start speaking.
From what most know as solely a yogurt drink, Timori has quickly become one of the fastest growing consumer companies by stealing competitor shares and reshaping the industry landscape. And we believe that this is just the beginning of a sustainable growth ahead. So today we, Fortis Capital from Universitas Prasetya Mulia, issue a buy recommendation with a 12-month price target of 6,000 rupiah, representing a significant 20.7% upside.
Cimory generated massive revenue increase with unbeatable revenue growth of 61% CAGR. This growth is driven by two product segments. The first segment is processed food segment, contributing 57% of the total sales. And the second one is dairy product segment, contributing 43%. Cimory can achieve this massive revenue increase because they focus on three key strategies. The first strategy is innovation. Cimory create a new product that have never been available in the market before. As a result, Cimory will have a greater market dominance. This innovation is also supported by the second strategy, which is Cimory highest advertising spending among the local peers, as is it reflected by Cimory presence through above and below the line marketing strategies. And lastly, Cimory ensure product availability through three channels, which are 1. Modern trade, 2. General trade, and the last one is Cimory unique D2C channel called Miss Cimory that will provide a shorter route to market to test new innovation and serve as cold chain alternative for perishable product. Now, we will dive deeper why we issue a buy recommendation based on our thesis.
Our first thesis reveals why the industry is attractive and how Cimory outpaces it as leading innovator. Indonesian dairy and meat consumption per capita remains low if we compare to its regional peers, presenting a structural tailwind as our GDP per capita increases. And this is further amplified by higher urbanization rate, driving higher demand for convenience products. And second, the government free meal program, which is expected to boost milk consumption in short and long term. Hence, with all these drivers, we confidently forecast a double-digit growth for dairy and processed meat industry. Now, why Cimory is winning? As the industry itself is getting more competitive, Cimory wins with two competitive advantages. First is a strong premium brand equity, as indicated through our survey that shows Cimory and Cancer as their top brand choices. This will enable them to sustain their brand dominance in the market. And second is their exceptional innovation capability to set new market trend while the market has stagnated with basic products. This ability has successfully boosted its market share over the past 5 years, gaining 6.4% in dairy along with 30 new SKUs and a massive 14% gain in processed meat along with 16 SKUs added. Building on its track record, we forecast a further 3.5% market share gain by 2029, driven by first, new product category launch like the jelly drink to secure additional revenue stream, and second, product line extension like the affordable singles to capture new consumer segment. Investors, with all these initiatives already driving strong growth, there are still more markets that Cimory plans to tap in, presenting more revenue potential ahead. Hence, you can rest assured as Cimory is well positioned for long-term sustainable growth. Our second thesis highlights channel growth as Cimory's strategy to stay ahead of its peers. Let's first start with the modern trade channel. The empty channel serves as a solid base growth, with the number of outlets projected to grow by 15,000 in the next 5 years. This is driven by a national upward trend in empty and ex-Java expansion. Second is the general trade channel. By increasing the penetration and adoption of Cimori products, we forecast that the number of GT outlets to grow to 390 outlets in 2029. Hence, out of 618 surveyed GT retailers, 40% have not sold Cimori products due to its premium price, ranging from 6 to 9,000 rupiah. This is half the average bucket size in GT Class 1 and even exceeding the average bucket size in GT Class 2. Hence, balancing affordable size such as singles and Cimori stick yogurt, Cimori is democratizing premium products, making it accessible to the mass market while driving higher adoption rates of 51% among Class 1 and 2 GT. Lastly is Miss Cimori. Unlike no other, Cimori has unlocked a high-growth, low-competition channel and stays ahead by proactively reaching and expanding its market. Miss Cimori achieves scalability by leveraging houses as Miss Cimori centers, which minimizes resistance and dependence on external outlets. With its solid strategy, Miss Cimori agent is forecasted to almost double in 2029. Hence, investors with Cimori's agility to continuously innovate, coupled with its channel expansion, Cimori is not just winning today, it's building a solid success to grow by a 15.4% revenue CAGR in the next 5 years.
As a leading innovator and strategic channel expansion, lead Cimori to sustaining high quality earnings and financial efficiency. Having strong brand presence and successful channel expansion lead Cimori to serve 3 key advantages. Firstly, stable net margin. Secondly, rapid cash cycle. And lastly, high quality earnings. By capitalizing on its strong brand equity and effective marketing, the company will benefit from greater flexibility in A&P costs, supported by operating leverage on its gross margin, and the advantage of fully equity financing will ensure more stable margins in the future, with a high net profit margin of 15.5%. Furthermore, by 2029, the channel sales mix will be more balanced, with higher contributions in GT and MCM, which both offer better cash collections rather than MT. And as a result, Cimori will have more rapid cash cycle of 53 days, enables for a faster investment. While achieving high quality earnings growth of 15.8%, Cimori keeps improving its operational efficiency that supports high free cash flow generation. And now, let's take a look at our ESG analysis and integration to capture the sustainable results.
In analyzing Cimori ESG performance, we use UNPRI guidelines where we apply 4 steps. The first step is identify. We identify the maturity ESG factor based on OJK and SASB framework. The second step is assess. Starting with the environmental aspect, Cimori tried to reduce water usage through 4 initiatives and recycle 99% of the waste. In social, Cimori recorded 0 fatalities and ensuring the product safety. Lastly, in governance, Cimori comply with all OJK recommendations and has a professional BOD and BOC. However, Cimori is still lagging in the environmental aspect, where better management metrics and waste management efficiency are needed. Hence, the ESG score of Cimori is 77.1 out of 100. After assessing the score, we compare Cimori's score into our model and compare it to peers, and the result of Cimori performance is standard performance and the risk rating is neutral. Lastly, we integrate Cimori performance into our scorecard, and Cimori is categorized as grade B, which means the risk is on par, no additional risk premium, and no impact on our cost of equity. Now, let's take a look at our ESG analysis and thesis translate into our buy recommendation.
We believe Cimori's sustainable growth will translate into a compelling intrinsic value, hence assigning a 70% weighting on DCF and 30% to relative valuation, which both indicate buy rating. Therefore, we confidently issue a buy recommendation on Cimori with a target price of 6,000 rupiah, implying a significant 20.7% upside potential. Accounting Cimori's high growth and unleveraged capital structure, our DCF valuation utilizes a 3-stage FCFE model that results in a target price of 6,075, a 22.2% upside potential. Under this model, we integrate our ESG scoring analysis to achieve 12% cost of equity and combine with 5% terminal growth from Indonesia's long-term GDP. We also conducted a relative valuation. In comparison to the peers, Cimori is exceptionally superior from outstanding EPS growth, better profitability ratio, remarkable profit margin, and healthy capital structure. Hence, we use the PG multiple to assess Cimori, which results in a 14.1% discount. From the scenario itself, from the scenario analysis, even a bear condition would only change our recommendation to hold with 8% upside. Furthermore, we varied 8 key metrics into our Monte Carlo simulation, yielding a 61% of the scenario supports our buy recommendation. We consider two notable downside risks. Firstly, student consumption will decline our forecasted sales in its point of distribution. However, Cimori's competitiveness in innovation and aggressive marketing will keep the company to stay relevant. Secondly, surging raw material costs will affect in gross margin deterioration. In minimizing this market risk, Cimori utilizes a hedging strategy on long-term forward contract and increases its bargaining power to many suppliers. Investors, we believe this is the time to invest for 20.7% upside potential in a company that has the ability to outpace the strong industry's growth, supported by strategic channel expansion that leads to an efficient and higher quality earnings. This is Cimori, leading with innovation and growing with channel. Thank you, and we are open for further questions.
We will now begin Q&A session. Judges, time is yours.
Thank you for the presentation. I have 3 questions for you. You assume that, sorry, can you come back to the slide on the growth by channel? I think the first one on the third thesis. Yeah, you mentioned that the growth will be driven by MCM, Miss Cimori agents, by 30% in the next 5 years. How do you think that is possible? Because that channel is not scalable, and I don't think it fit with Cimori model that carry a lot of SKU. It can work with Yakult because they only have like 2 SKU. And also, how do you think that will impact the gross margin? Because usually this channel carry a high commission cost. Secondly, in terms of A&P per sales, I see your A&P per sales is declining. And how is that possible again? Because, you know, Cimori product is usually discretionary and impulse in nature. So it requires a lot of marketing investment. And they also plan to expand in GT, which requires a lot of advertising expense in the TV, which is a new channel for them. Can you expand that? Thank you.
Okay, thank you for the question. If we can go to the appendix network, I will explain about the Miss Cimori. We can go to firstly to the OPM. Okay, next we go to the, this one. Okay, so for the Miss Cimori, we believe that the increment sales per employee will be increased in the upcoming years, as we believe Miss Cimori will be more efficient. That we also believe that Miss Cimori will be more benefit with the more SKUs because we believe that the market will try to buy some product that they want and they like. Through the Miss Cimori, as we know that Miss Cimori have good networking and relationship management through WhatsApp. They can go to their house, school, and many more.
How many SKU that Miss Cimori can bring to their neighborhood? Have you done research on that?
Okay, actually by our survey to the Miss Cimori agent, we believe that Miss Cimori, it depends on Miss Cimori capability on transportation, either they use car or motorcycle, but actually, on our survey, Miss Cimori said that they usually take pre-order on the customer and they will deliver it to their customer. So we believe that Miss Cimori will utilize its storage and transportation to deliver its product based on the order of the customer. Thank you.
I would like to add to my colleague's explanation earlier. So I would like to answer your first question from 2 perspectives. Starting off from the Cimori side, second is from the consumer side. So starting off with the Cimori side, Cimori recognizes that their products are perishable, especially 2 products, which are the sausage singles, as well as the Cimori stick yogurt. And they also recognize that the penetration of cold chain in Indonesia is still very low as compared to the Asian peers. Hence, they use the Miss Cimori as a cold chain alternative, as well as quote-unquote cheaper alternative for the cold chain infrastructure that is most common in Indonesia, such as the one that is owned by Diamond. So this is from the Cimori side. And starting from the consumer side, actually, Miss Cimori triggers impulse purchases. Like you mentioned earlier, Cimori has affordable products, and they are also frequently purchased and impulsive in nature. Hence, by utilizing Miss Cimori, which delivers door to door and approaching offices, they use WhatsApp, as mentioned by my friend. This actually catalyzes purchases more often than GT and MT. So that I hope that answers your question.
Okay, thank you, Paraja. I'll be happy to address your question on the ANP to sales ratio. So firstly, if you could see that we forecast the ANP to sales ratio to be lower than the historical stuff, but in terms of nominal value, we see that there is an increasing ANP to sales in terms of the nominal value itself. We see that we could forecast the ANP to sales like this because we see that the competitors itself is investing to a short-term promotion and in-store discount, whether the Cimori itself is investing for a long-term brand equity that will be added by my friends from our brand equity survey.
In addition to my colleague answer, can you please go to C? So we also conducted a survey and we see that Kenzer and Cimori has built a strong brand equity as both of them is resulted in the top brand choices for consumer. Hence, they can leverage their strong brand equity as they expand in the GT. And also, we also conducted an in-store promotion comparison. And although the competitors of Cimori allocate a lower NP to sales, however, they are more aggressive in their in-store promotion. Hence, we see that Cimori marketing strategy is very effective in building the long-term brand equity compared to the other competitors that just focus on the short-term impact. Yeah. Hope that answers your question.
Thank you.
Thank you for presentation. Can we back to slide? There's no pages here. The target price of 6,000 based on FC, FE, and PAG. Yes. Okay. I'm always as a quant. I'm always suspicious of round number, right?
Yes.
6,000. Okay. So can you give me an explanation and justify to the weight you use in, first of all, the 70% of the free cash flow and the composition of 30% of the price to earning growth, and why you come up with that weight? Thank you.
Thank you, Patigor, for the question. I would like to request to open the F1, the methodology weighting. So we're assuming a 70% heavy weighting on the DCF valuation itself because we see that the market has mixed Cimori's unrealized intrinsic value, because we expect that the company itself will have a sustainable revenue growth of 15.4% CAGR, supported by a strategic channel expansion, and also it is supported by a higher and efficient cash flow generation. Whereas we also want to justify our intrinsic value to the market basis, so we set a 30% on the PEG itself, and we see that in the PEG itself, it has a constraint of the company and the peers has no two differentiated business segments like the Cimori itself, and then we see that the Cimori's premium market valuation is a rare occasion in the industry itself. So therefore, we are assigning a smaller rating on the PEG, and we are focusing and emphasizing on the DCF valuation itself. Thank you. Hope that answers the question.
Hi, thank you for the presentation. I have quick questions on slide 12. Slide 12. Not this one. I think maybe the previous one. Oh, maybe after it, maybe. Yeah, this one. No, this is interesting. So you did a survey of 389 consumers.
Yes.
Like how did you do it? Like, do you do it like in just one region, or you do it like spread regions, like
Spread region, but it's focusing on the Java, Sumatra, and Bali to capture more consumer segment of Cimori.
Like you went to Sumatra and you went to Bali.
We conducted online survey and Google form.
Oh, online survey and Google. Okay, thank you. And then slide 15. Uh, 15 is the new product category. So basically, what I'm trying to say is like, so they do like so many product launches, right? Like do you have like any information like for each product, like how many years they will consider it like a success or a failure, and like how many capex they usually will be ready to spend, like if it's above X and it's not successful, then they will discontinue it. Do you have like information like that, or?
Thank you, Pak Herman, for the question. I believe Ms. Chimori, as their unique D2C channel, will serve as a channel that has a shorter route to market to test for new innovations. Hence, the company itself has a strong market research that will benefit them in terms of product feedback. So therefore, we see that the company itself is benefited from having a competitive advantage of product innovation. And also, if you could go to the F7 on the capital expenditure, we forecast the company itself to have a multi-year capital expenditure approach, whereas the company will deploy their capital expenditure when the utilization rate exceeds 70%. And from our assumption itself, in 2027, we see that the utilization rate in the previous year exceeds at the 78%. Therefore, we deploy a significant capital expenditure on the 2027. Hope that answers the question. Thank you.
And in addition to my colleague answer, I want to go to the appendix A1 about the business segment. So if we can see in the business segment, this is the line of the product of the dairy and the processed food. And if we see that, that Chimori have several products, they create a lot of diversification. And if the product is not very performing well, they will discontinue it. Like for the example is like the drinking milk about the banana flavor. They already discontinue it because they see that it's not performing very well. So Chimori is very adaptive and
Time's up. Let's give them a round of applause. Thank you, Team Fortis Capital from Universitas Prasetya Mulia for your presentation. Please be seated. Please be seated. Now, please welcome the next team, Luwih Capital from Universitas Surabaya. Ready, team? You have 10 minutes for presentation. Please pay attention to the reminders from the timekeeper here. The timer starts when you start speaking.
Check. For centuries, milk and protein have been the building blocks of human beings to steadily grow. Well, obviously, we could reminisce when we were children that our parents would give us such nutritious food so that we could grow up to the present day. Well, it does the same for Chimori, an Indonesian company whose building blocks came from these two sectors. Chimori has emerged as the top-of-mind brand in Indonesia's food and beverage sector, from dominating across the world through capturing hearts through strategic social media campaigns. Honorable judges, we are Luwih Capital from University of Surabaya, and today we will tell you why Chimori stands as an industry leader in the food and beverage sector. Chimori is a leading player in Indonesia's yogurt market. It also extends its extensive processed food products under the brand Kanzler. Supported by its cold chain infrastructure, nationwide reach, and consumer-centric approach, Chimori is well poised to achieve solid top-line growth. Chimori has 6 production facilities across Java and also a robust cold chain infrastructure. Despite of its significant price appreciation from IPO of 3080, Chimori still remains undervalued. Chimori's forward PE ratio is 21, below the peer average of 32. This makes Chimori as a unique and attractive investment opportunity. Having said that, we would recommend you to buy Chimori with a target price of 6,025, implying a 22% potential upside. This is driven by three main catalysts. Well, let us uncover the full story of Cimory. Cimory is able to gain significant growth by riding the wave of dairy products and consumer food products demand growth.
Indonesia's annual dairy and protein consumption remains significantly underpenetrated, which behind other countries in Southeast Asia. This growth potential is further reinforced by the rising adoption of healthy and urban lifestyles in the global market. We are confident that Cimory can sustain double-digit revenue growth due to three key factors. First, favorable macroeconomic conditions. Second, the establishment of a new factory in Pasuruan. And third, the rising consumer expenditures in Indonesia. Indonesia's economic outlook remains strong, with GDP growth consistently surpassing global average at 4%. This positive trajectory is further reinforced by expanding urban consumer base. Second, Cimory plans to expand its consumer food production capacity in Pasuruan. This decentralized production structure not only optimizes logistical costs, but also enhances Cimory's resilience against logistical disruptions. Lastly, Cimory offers the most comprehensive product portfolio among its peers by serving a wide range of consumers from budget-conscious to premium segments. Furthermore, Cimory demonstrates a strong potential for robust top-line growth, as we expect net profit margin to 27% by 2028, driven by a sustained increase in return on equity. By investing in cold chain infrastructure, Cimory has achieved a near complete penetration in modern trade, while simultaneously expanding its presence in general trade. Launched in 2013, Miss Cimory has become a key direct-to-consumer channel, reaching 528,000 households, with 75% of its products sold as repeat purchase. It demonstrates the strong customer loyalty and engagement. Cimory acknowledges the significance of collaborative initiatives with other brands, which enhance Cimory's brand awareness.
At the end of the day, the question becomes why should you buy Cimory and why now? As global economy faces uncertainties, we believe that investing in businesses with proven resilience and strong competitive advantage is essential. Cimory has demonstrated its resilience and sustainable growth through two key factors. First, Cimory consistently ranks among the top in EBITDA margin. Second, Cimory's competitive advantage drives its market dominance. Cimory continues to lead with products featuring less sugar content, ensuring that health-conscious consumers could also enjoy delicious and nutritious options without guilt. Cimory also played a central role in the consumer food market, particularly offering urban fit and high-protein food under the brand of Gensler. Since 2020, Cimory has also always topped Indonesia's yogurt market, as reflected in its commanding presence in the top brand index. This success is based on Cimory's strategy of constantly releasing new products catering to various consumers' needs. Cimory has also successfully transformed its marketing strategy to a dynamic BTL approach, which focuses on dedicating 100% of its marketing budget towards social media ads and collaborating with hundreds of influencers. This strategy has many implications such as driving trial purchases, enhancing sales, and fostering repeat buying behavior, which all ultimately leads to aggregate revenue growth.
Cimory is not only focused on business strategy but also focused on ESG aspects. With the MSCI framework, we conclude that Cimory's rating is AA. Higher than their global peers, which is mostly have a BBB score, this is support the argument that Cimory is currently underpriced. Cimory has substantial progress in managing livestock waste, with 99% of waste recycled in 2023. Cimory also transitioned to 100% recycled plastic pellets using solar panels, which leads to 86% greenhouse gas emission reductions. Furthermore, Cimory also allocates funds to support community development programs to empower farmers, women, healthcare community, and also student scholarship. With over 15,000 small-scale dairy farmers and also 27% bee women, Cimory provides training, mentorship, and also resources to improve their management. As of 2023, Cimory has donated over 7,000 liters of milk specifically to community health centers. Lastly, in collaboration with Karya Salaman 4 Foundation, Cimory has supported 15 students from 14 partner universities across Indonesia by the scholarship program. Cimory also shown its commitment towards shareholders through full regulatory compliance, balanced board compensation, award, certifications, and also low minority interest.
Deriving from our key thesis to give you a clear picture of why you should buy Chimory, we employ a DCF valuation with a target price of 6,025, representing 22% upside. Our assessment is based on blended valuation approach of 50% DCF FCFE and 50% EV/EBITDA multiples. Through the DCF FCA method, we derive a valuation within 5 years with a discount rate of 10.11% and perpetual growth rate of 3.22% obtained from Indonesia GDP projection. To enhance the relevance of our assessment, we conducted a peer comparison analysis between the similar companies in Asia by using EV/EBITDA multiples. We also perform a comprehensive scenario analysis covering the bull, bear, and bear scenarios with the overall outcomes indicate a buy recommendation. To support our valuation, we conducted a sensitivity analysis, highlighting in 100% buy recommendation with no hold and sell recommendation. In addition, by executing 300,000 iterations in Monte Carlo simulation, enhance our confidence in advocating a buy rating for Chimory. Additionally, by using the spider plot and tornado chart, we want to analyze the impact of various assumptions towards Chimory target price, highlighting that cost of goods sold and discount rate are the most sensitive account. We also identified 3 key downside risks towards our investment recommendation. The first one is macroeconomic risks of economic slowdown, raw material cost rise, currency exchange volatility, and also minimum wage hike. The second risk is about industrial risks of demand slowdown, and lastly, business risks in the competitive landscape and contract negotiation failure. However, all of these risks have been mitigated completely by the company through its initiative strategies. In conclusion, with promising growth, significant expansion, and also innovative capability, we are confident that Chimory will rise to the top of Indonesia F&B industry. We, Luwih Capital, are reiterating our buy recommendation for Chimory with a target price of 6,025, representing 22% upside. So, what are you waiting for? Let's start your successful investment story with Chimory now. This is Chimory, innovation in nutrition. Thank you for listening.
We will now begin the Q&A session. Judges, time is yours.
Hi, thank you for the great presentation. Quick questions. Can we go back to slide 26? The ESG analysis. Up maybe. I think yeah, this one. So how did you get the 8.0 from 10? How did you get the number? You only have like some comparison and then suddenly it's 8.
Thank you very much for the question. To further given the explanation of how we derive the 8 point from 10, I would like to request to open our appendix list of ESG analysis. So the methodology that we use in our ESG analysis are based on MSCI ESG scoring framework and also ASEAN governance scorecard. From the MSCI ESG scoring framework, we can determine the risks and the opportunity of the Chimory itself. From the exposure share, the risk is consists of from the environmental and social, and the opportunity is derived from the governance through its strong corporate governance. By using this industry weightage, we can find the ESG performance score for the Chimory itself is 8 from 10, which indicating a AA rating for Chimory.
Okay, and last question from me, slide 32. The DCF, I think DCF, and then you have the not this one. The comparison with the peers. Yeah, this one. Just a quick question. So I'm not familiar with that Hub LNS 6005997SS. Can you describe a bit about those companies, those two comparisons? Why you choose those two?
Thank you very much for the question. About the industrial profile, please refer to the appendix of trading comps and multiple valuation of appendix 17. So about the 3 companies that we select are based on the product portfolio that have the similarities in Cimory. As we know that Cimory offers the diverse range of dairy products, not only in UHT milk, but also in spawnable yogurt and drinkable yogurt. We choose the 3 companies that also have the similar product portfolio to Cimory. And one of them is the product is already in Indonesia, is the Frisian flag, which is in the Dutch Lady Milk industry, which is the holding is in Malaysia, and their product is currently in Indonesia with the brand of Frisian flag. I hope that answered your question.
Thank you for your presentation. I have 2 questions, 2 quick questions. First of all, go back to slide 24, I guess. The marketing strategy from the above the line to below the line. Yes. You highlight the dynamic from using the collaboration with key opinion leader and social media influencer. Can you elaborate is there any metrics to measure the impact of this marketing, ROI of this marketing to the financial bottom line? That's the my first. Secondly, the slide 27, the ESG. You mentioned about the reducing a greenhouse effect of about 86%. Yes, this one on during 2023, right? And can you elaborate how the impact of the financial impact of this ESG analysis, social impact to the bottom line of the company? Thank you.
Well, sorry. Thank you so much for your question, our honorable judges. May we go back to the BTL approach slide? Yes, thank you so much for your question. Well, yes, regarding the social media ads usage and the BTL approach, a dynamic BTL approach, if we may define, the Cimory has successfully engaged a lot of users on various social media, such as TikTok and Instagram, and also for other social media. This dynamic BTL approach is not only for the revenue, but also we can see that the revenue is currently leveraging for Cimory, but also for the awareness that brand Cimory has. Because Cimory's strategy is based on constantly releasing new products. Obviously, these new products need a lot of new awareness, which leads us that the most effective ways in nowadays is innovating, not only in nutrition, but also in the way of we advertise these things. Thank you so much, Maida Asra.
Moreover, if I may add Marco's answer, as we all know that most of us here obviously use social media, right? Therefore, we believe that the use of social media is important. Even Cimory itself dedicates 100% of its marketing ads to social media advertisement, for example, like on TikTok, on Instagram, etc. And then, how can we measure the successful rate of the ads usage? Well, we use various indicators for Cimory. For example, like the first one, the engagement rate. Engagement rate's purposes is to raise awareness of the new products, just like what Marco said. And second, it also leads to the click per ads rate, which means so if you check out on TikTok, it will lead to keranjang kuning or yellow card. Now, the Cimory's sales from the online section is also high.
All right, if I can add, why Cimory should use the BTL marketing approach related to the bottom line of the financial statements of Cimory, because the use of the social media is more cost effective than the ATL approach that will make a bigger share of profit for Cimory. I hope that answered the question.
And I want to answer the ESG analysis. Can you go? Okay, with the 86% greenhouse gas emissions, we know that from the below the line marketing, we know that Cimory can reduce the paper or anything else that physically. So it can reduce the emissions, and we know that Cimory's core products is in the nutrition and dairy products. So yes, it will focus on the social aspects, but Cimori still focus on the environmental and also the governance.
Okay, if I can add, I will go to the appendix ESG analysis related to the environmental. So we conclude that the three key issues related to the environmental aspects. That first one is carbon emission, energy saving, and waste management. So related to the greenhouse gas emissions that reduce 86%, we conclude that the environmental aspects for Cimori is very good because the key KPI performance score is on 6 and industry wage is on 10%. So that's not a really bad score for Cimori. I hope that answered the question.
Additionally, if I may add towards the Michael question about the aspect of the ESG towards the financial management, I would like to revert to our cost of goods sold breakdown. As the company towards the greener and about the emission here, we can see on the next slide that the factory overhead is only cost around 11% of the total production cost, which means the Cimori has enhanced in the efficiency of its overhead by changing from the industrial electricity towards the solar panel one. And this will increase the company efficiency for the next few years. Thank you very much. I hope that question.
I think one of your highlight in the investment thesis is that you mentioned one of the strategies, Cimori launching a lot of new product and requires a lot of investment in advertising, especially in the social media. But as they expanding into the less urbanized area, I think does the strategy still relevant because they have a limited access to the social media and the internet? Thank you.
Well, okay, thank you so much for your question. I would like to revert to the revenue and expenses breakdown, especially on the distribution channel. So for the next slides, thank you. Oh, sorry. Yeah, thank you so much. So over here for the urban area, for the unreached area, for the areas that do not really have the internet connection, Cimori still has the power to distribute on that channel. So for example, through modern trade, Cimori has already reached almost complete retail stores in Indonesia. And also for the general trade that is scattered around Indonesia, Cimori has also generated around a third of its revenue. To furthermore analyze on the impact of the social media, we know that social media nowadays also become the word of mouth of people nowadays, because we cannot be disconnected on the internet. So that's why I think that the BDL dynamic approach over here is here to stay for longer. Thank you.
If I may add Marco's answer, however, even though on the worst case scenario, there are some places that is not accessible for Cimori to...
Time's up. Let's give them a round of applause. Thank you, team Luwih Capital from Universitas Surabaya for your presentation. Please be seated. Now, please welcome the next team. PSB Elites from Universitas Indonesia. Ready, team? You have 10 minutes for presentation. Please pay attention to the timekeeper here. And the timer starts when you start speaking.
Oh, bisa PSB Elites. Ini nggak bisa ya? Tes. Oh. Tes.
Have you ever wondered how premium brands can thrive in a growing market? Honorable judges, we are PSB Elites from Universitas Indonesia, and today we're going to uncover the story about the next FMCG giant, Cimori. After reaching its all-time high in 2024, Cimori stock saw a 20% decline. However, its fundamentals remain strong, with revenue growth far outpacing its peers. Hence, we issue a buy recommendation for Cimori with a target price of 57.40, reflecting a 70% potential upside, which is driven by two key catalysts, with the first one being the beginning of market revival, the second one being their premium products made accessible to the market, and lastly, their best-in-class financials.
Cimori is the market leader for yogurt while rapidly expanding in milk and processed meats. This is driven by their extensive product lineup that is introduced to the market to its extensive marketing initiatives. It also operates a wholly owned chain logistics that helps streamline its value chain and further, resulting in a balanced channel mix. Now, let's uncover our investment journey, starting from Cimori's appealing industrial landscape. Cimori operates in a high-value industry growth and is set to experience a steady growth. We expect this is to be driven by two key factors, which is consumption pull factors and regulatory push factors. Cimori is set to experience a bullish top-line growth driven by several key factors. We expect Indonesia middle class to rebound, driven by optimistic urbanization and disposable income growth. Second, consumer spending on staples is set to rise. Dual-income household trend have overpaced single earners, leading to a busier family that favor convenience for food and FMCG products. Third, urbanization and wage growth have made several staples such as milk and meat less exclusive. This is to be sustained due to more interest towards protein consumption, and our research of 300 respondents support these findings. Now, let's move on to the push factors. Indonesia still lags behind its Asian counterparts in several key industry milestones, such as protein and milk consumption per capita, but this also means more room for growth. Its lags, however, is said to be revitalized by its growing and leading cold chain market. Additionally, government initiatives in social spending and nurturement further support Cimori fiscal landscape.
As the industry begins to revive, Cimori will capitalize on this opportunity by making their premium products more accessible. We already know that Cimori is the market leader in yogurt, but that's not the case for the rest of its product lines. So they bring new innovative products to the playfield. Cimori used to grow with a dairy-led revenue mix. And in 2020, they disrupt the market with singles RTE and also crispy nugget. Later on, the food segment leads ever since, proving a strong market response. However, we believe that the dairy segment will stay resilient because of three factors. The first one is healthy growth in milk. Second one is the yogurt market leadership. And lastly, new product launches that keep the segment competitive. In terms of pricing, Cimori's cheaper dairy products can reach more customers. Meanwhile, their premium pricing food segment can fuel top-line growth. Cimori has a relatively higher spending in marketing compared to its peers. However, this results in top-of-mind brand-building initiatives unlike no other. To ensure mass accessibility of its products, Cimori had set an equal channel mix with more focus on expanding in GT and also Miss Cimori. We believe that this will strengthen the company's position in underserved areas, given the heavy reliance in traditional retailing. MT still deserves the equal mix because they can also propel the position in the underserved market. They will leverage their capabilities of spreading the coverage of D2C in smaller cities, chiller investments for potential GT outlets, and also the inclusive product pricing. We believe that this will further push expansion for both channels. Our consumer research also shows that most consumers now start to view Cimori as a premium affordable products. And this will propel for higher revenue from both channels. With a blend of external opportunities and internal capabilities, we believe that Cimori will grow with a volume-driven top line of 9% CAGR until 2028.
Mission to winning the market will be further fortified by the best-in-class financials. First, it's through their leading FMCG margin leadership in the sector. But we believe that the current number is not really showcase Cimori's true potential. Hence, we expect there will be expansion in the margin, driven by the improvement of utilization rate and normalized raw material costs, supported by shift channel from empty, and lastly, high net cash level protect the bottom line. Last 2 years, GPM have pressure due to the drop in capacity utilization rate, compounded by high raw material costs. But we believe that this situation will be uplift as utilization rates should increase and also raw material price should normalize. Hence, we expect a margin expansion until 2028, providing more room for higher A&P spending, further propel Cimori's future growth. Second, Cimori can reduce its selling expense to 80% of revenue as they reducing empty blend that can high extra costs such as high listing fees and expensive placement fee. Moreover, expensive distribution network and wholly owned cold chain can support efficient GT expansion. Lastly, Cimori as one of the few debt-free companies in the sector can further uplift their net margin, further support their future growth, showing by OCF to CapEx to reach 6.9 times in 2028.
Accounting all our analysts, we use a blended target price with a DJ valuation and PE multiples. With 6 key drivers at the foundation of our valuation, we believe that Cimori has a strong stance. While a bear condition might shift the stance to sell, but we believe that Cimori fundamental strength will provide a resilience. Ensuring all our data is connected with the financial and impacting the DCF valuation, we use it through the stable terminal growth and higher pre-discounted free cash flow. Our terminal growth induced from GDP growth and industry outlook, with our weighted average cost of capital derived mostly from its cost of equity, knowing that the cost of debt is insignificant due to Cimori zero debt condition. We also do a pure relative comparison that used in 3 criteria. Is it the business model, the regional fit, and the company size? Our stress test also confirms limited downside risk, reinforcing our valuation with respect to our valuation assumption, our projected ASP growth, and our projected volume growth.
Next, we identify several downside risks to our investment recommendation. First is the dual pressure of rising whole milk powder prices and exchange rate volatilities. Cimori mitigates this to their forward contracts and inventory buffer. Our target price is also opposed to the competitor imitation. However, Cimori maintains its first mover advantage to the rapid product innovation and strong marketing execution. Lastly, purchasing power dynamics also pose a risk to Cimori. Cimori mitigates this through the strategic launches like cancel singles, in-house marketing team, and rising minimum wage, which boosts the purchasing power. Cimori is not just prepared for their risk; it is also a leading example in ESG. We use MSCI framework that Cimori holds a AA rating. This score is validated by its inclusion in the top 30 IDX leaders just 3 years after its IPO. First, their initiatives goes beyond just sustainability. It is also aligned with the business achieving 2 goals at once. Cimori is the first dairy company to introduce lighter pouch packaging while improving their water, waste, and energy management to improve their cost efficiency. Their strong community empowerment helped their business to strengthen their sales channel and reinforce their supply chain. Cimori has award-winning governance with stable growth under second-generation CEO and commitment to minority shareholders. While Cimori is well-positioned on the market revival and their accessible premium products and best-in-class financial, we PSB Elites are reiterating our buy recommendation with a target price of 57.40, representing a 17% potential upside. Let's seize the opportunity with Cimori, where strong brands meet strong return. Ready to eat, ready to go, ready to lead. Thank you.
We will now begin Q&A session. Judges, time is yours.
Thank you. I think Can you go back to the slide 31 about the lower channel, shifting to the lower channel cost? I think, yeah, you mentioned that Cimori will benefit from shifting to a low-cost channel like GTM and MCM, and but we know that they are relatively new in GT, relatively small, and while their investment in the MT has already been done in the past, and they already have a very big size in the modern trade. So while in the GT, you need to like share the margin with the distributor, hire a new salesman. So why do you think it's cheaper? And it's on the GT1 and on the MCM side, they have a higher commission cost usually. So why do you think that's possible? And I think on the second question, why do you think Cimori will be successful in expanding in the general trade? So because expanding general trade is not the easiest thing to do for an FMCG company. They require a lot of heavy of investment and need long time to build that distribution network. Thank you.
Yes, we acknowledge that maybe some opinion that say that modern GT may be costly for the Cimori, but we believe that as our observations show that the company actually doesn't need a highly chiller investment as some distribution or some GT already have chiller from another brand, and they usually put it on their chiller. And also relating to the MCM, sir, we believe there will be economies of scale as higher productivity per MCM sales as they increase the coverage, home coverage ratio.
I think for the chiller one, how many chiller that usually a GT has compared to the shelf in the mini market?
Okay, and I think this one is one of the why we say that in GT more less costly than the MT. If you put your product in MT, usually when you put it in chiller, they require you a fee for put your product on chiller, but it's not the case for the GT. And usually GT having 1 until 3 chiller, and it's usually after our observation, Cimori is the only one yogurt product that exists in GT. So I think this provide more growth room for Cimori, and also maybe my friend.
Okay, so if I may add to also answer the second question, why they would thrive in GT. So we have data actually regarding how the sales value for retail, for grocery is mostly still derived from the general trade. And we assume that it's because GT is the most spread trade channel in Indonesia, especially in tier 3 and tier 4 cities, because tier 1 cities is only comprised by 15 cities approximately in 2024, if I'm not mistaken. And so from there, we tried to conduct consumer research. This is based on 300 samples. And we took out a pie from our tier 3 and 4 cities consumers. And as we can see here, that there's surprisingly a shift in brand perception, because Cimori and Kanzler is started to be perceived as still a premium quality product, but they offer affordable product lineups. That's why, as we can see here, the majority says that it's affordable but still with high quality. While on the second position, they still expensive but high quality product. But then later on, we try to create a product budget fit by taking a pie out of the sample with lower class consumers. And as we can see here, there's the budget that they set for each of this consumer product segment. And as we can see here, Cimori's products, especially the innovative ones, already fit their budget constraint, while some from the RTC sausage and nugget is still not applicable. However, we see that this signifies there's still a room for growth or soon to be realized benefit if we invest in Cimory. Because as we all know, in non-tier 1 cities, the GDP per capita growth is faster than tier 1 cities. So we can see that there's still a room for growth for Cimory. And that's why we believe that they will excel in this channel.
Thank you for the presentation. I have two questions. Okay. If you know, the ESG is just not about the environment; it's about social and governance, right? And you mentioned in slide probably 45 something. Yes, you branded the Cimory as a groundbreaker in the ESG excellence, right? Okay, so you also mentioned about the social inclusion by the Miss Cimory to the impact of social inclusion. Is there any premium that market will give to the share price of Cimory due to the excellence in ESG, and comes from your upside potential of your price target? What do you think? How much the upsides come from this ESG excellence? That's my first question. Second question is that the Cimory seems to very aggressive in innovating the new products. And what do you think is the impact to focus on the core business, if to the diversification of this product to the core business? I mean, sometimes you have to focus, sometimes you have to cost efficient, right? What the impact is of the aggressive innovation? Thank you.
Okay, let me answer the first question first, sir. So based on our research in their ESG that they're achieving 2 goals at once, Cimory is very leading in the 3 aspects of their ESG. The first one is the environment. They're invested in a lot in waste management and also transition to eco-friendly energy. This is contributed to their investment in reduce the operational costs and then enhance their efficiency. So it is indirectly to the target price as well. And then the social one is the fostering diversity and inclusivity on their ESG. And they're also community empowerment with Miss Cimory and the small scale cattle program. It is initiative like this, like Miss Cimory and also the small cattle program, is strengthen their supply chain, which can lead to the more efficient costs from the supply chain, and then the expense sales channel to boost their revenue and the top line growth. And then from the governance, the award-winning governance led by the second generation CEO, their strong governance under second generation ensures stability during the COVID and the post-COVID. Thus, we score that the governance is driving long-term business growth for the Cimory, for the company.
Okay, thank you so much, Isan, for the first question. Pak Tigor, let me answer the second question for you. So, can we go to appendix C4, commitment for continuous R&D? So, here we try to estimate the SKU growth compared to their R&D expense. And although we didn't compare with peers here, we have seen that their R&D expense is very high. So when we're talking about whether this will disrupt their core business or not, we don't really think so, because although we noticed that they recently have just tried to expand their business line, we believe that this is still very uncertain. And we can see that this might still very heavily related with their core business. Like for example, if they try to baby food industry, maybe it could still be related to dairy, but they try to make product by spreading more customer segments. So I do think that it's more of Cimory's core focus as of now. And why do we believe that R&D is not something bad for Cimory is because here in the competitive landscape, Cimory is actually a first mover, and then the competitor are the fast followers. And although their competitor products are priced slightly above below market average from Cimory, we do think that Cimory is still benefit from first mover advantage because they perceive as the OG brand with OG quality. And we have also identified some competitor trying to create some disruptive moves. But as we can see here, I personally myself haven't really seen a strong market response from this. So we believe in Cimori's capabilities in R&D is way above its peers. Thank you.
Hi, quick question from me. So regarding the MT versus general trade, yeah. So as we know that currently we are all facing the weakening purchasing power, right? So in the future, like which one is more resilient, the general trade or MT, modern trade?
Okay, can we go to the appendix? Okay. Yeah, thank you for your question, Pak. So yes, in the future, we also there is a possibility that our purchasing power will be weaker. But however, we can see that in macroeconomic wide, several notable areas such as inflation, we can see that inflation is quite softening, and therefore, especially for food inflation, and we believe this will help stabilize the weakening purchasing power, and also. Again, for the GT expansion, my friend said that Cimori have focused to expand in Tier 2.
Time's up. Let's give them a round of applause. Thank you, PSB Elites from Universitas Surabaya for your presentation. Please be seated. Okay, we will have toilet break for around 5 minutes.
investasi di Bibit memang senyaman ini. Sampai bisa ditinggal tidur. Dengan aktifkan SIP, investasimu jalan otomatis. Kamu bisa tidur pulas dan dapat return optimal. Shh, jangan ganggu. Mending aktifin SIP sekarang. Tidur lebih nyenyak, lebih tenang. Karena investasi reksadana di Bibit. Dengan berbagai pilihan produk investasi di Bibit, beli reksadana berkualitas. Yang optimal, kembangkan uangmu sesuai dengan profil resiko. Kamu juga bisa beli SBN dan obligasi FR. Investasi 100% aman, dijamin negara. Return pun lebih optimal. Bikin cuan makin berkembang, investasi di Bibit sekarang.
Lagi serius-serius mau beli saham, malah dimainin sama aplikasi. Seriously?
Trader saham seserius kamu butuh aplikasi yang serius. Pakai Stockbit. Dengan tools analisa terlengkap, bikin trading saham jadi lebih serius.
Please welcome the fifth team, Pyrite Research from UPN Veteran Jakarta. Ready team? Ready? You have 10 minutes for presentation. Please pay attention to the timekeeper here. The timer starts when you start speaking.
Good morning, esteemed judges, mentors, and fellow competitors. We at Pyrite Research believe to have found a particularly interesting company in Indonesia, Cisarua Mountain Dairy, or more commonly known as Cimori. With numerous positive prospects, we believe to issue a buy recommendation with a target price of 6,650 Indonesian rupiah with an upside of 34%. We've identified three main theses to support our case in the value of investing in Cimori, such as emerging as a serious competitor across all business segments, margin expansion as raw material normalizes, and lastly, premium valuation but worth every penny.
Now, Cimori isn't just a dairy company anymore, but rather a big player within the processed food sector, such as Kettle Single and Chicken Nugget, and their top line being dominated at 57%. Like other consumer company, raw materials still dominating the COGS, and it should be emphasized that they still remain on import. Like other company, with the disruptive strategy and innovation, Cimori places itself as one of the company with the highest selling impact. And we, by research, believe is an essential cost to introduce Cimori to the masses and follow through to the market. Within just 4 years, Cimori has positioned itself as a market leader in chilled processed food sector, thanks to Kettle Single. Since 2020, processed food revenue growth has potential 4 times because of urban population and instant food demand. We anticipate that Indonesian will reaching the Malaysia, growing with same culture and demographic characteristic. Despite the dairy demand, we believe that free lunch program can boost demand dairy, especially is boosting the Cimori growth or revenue. Only in just 5 years, Cimori can increase its market share 8% or 8 times. Unlike other company, Cimori is not focused on general trade market, but also modern trade market, which is a unique strategy that Cimori using a Miss Cimori to leverage its market share.
Along with aforementioned, we expect gross profit to recover by
we expect the gross profit. We expect the gross profit recover by the impact of El Nino, which has previously driven up soft commodity price, and this is despite although the Cimory have many raw material, but we focus on two raw material. This is chicken price, and poultry will be poultry and powder milk price.
Going over the industrial outlook of Cimory as well, we believe that sugar excise, which will be implemented by the government, could pose potential issues for Cimory as well. But through our own research, we found that through our benchmark of chocolate milk, that Cimory has the second lowest content of sugars, giving them a lower percent of sugar taxation. And however, our fresh milk standards that Cimory sources domestically are still safe from their sugar excise and will continue to grow their gross profit margin.
Okay, we know many hesitates to the company high valuation, but we believe that depend the high valuation is worth every penny. And if we see the PE ratio of the Cimory, this is the discount of the 11% of the mean. And Cimory is high PE if we compare to the average industry. Right now Cimory in 27.7 times, and right now in average industry in 20.271 times. And if we look the top line growth, Cimory always consistently to give us the double-digit revenue growth, often to 2 until 3 times higher than the industry average. And the net profit margin, Cimory always maintain their net profit margin to 1.5 until 2 times higher than the industry average. And this is our three thesis. And our valuation, we use blended valuation with discounted cash flow and relative valuation, PE ratio. And for the discounted cash flow, we use a WACC of 10.49%, with the long-term growth is 5%. And the PE ratio, we use +1 standard deviation because the Cimory is the growth stock. And if we see the current PE right now is attractive, 11% discount compared to its average since the IPO.
Okay, so we identified two primary downside risks to our buy call recommendation. There are macro risk and business risk. The risk of macroeconomics arises from Trump 2.0 protectionist policies, while potential investment reallocation could be beneficial, but issues related to BRICS and the dollarization create pressure from the US, which may lead to exchange rate fluctuation and increase import costs, squeezing the Cimory's profitability. We calculate every 1% of appreciation of the exchange rate, net income will decrease by approximately 0.9%. And on the other hand, on the business risk side, the Cimory programs face various risks. This includes the operational disruption due to the insufficient training or oversight and the reputational damage if there are mistakes in service and also in service and product information. And also the financial risk that the incentive system is ineffective for agents. So we estimate this could lead to the profit decline by 7% to 17%.
Looking over at Cimory's ESG, we identified one key issue within their reporting: minimal disclosure and transparency, giving them an LSEG score of 35 out of 100. Diving deeper into their environmental segments, Cimory's brilliant use of having zero upstream business boost their Scope 1 and Scope 2 emissions by just under 20,000 tons of CO2 equivalents emitted in 2023 alone. Now going to social, Chimori leads the pack for giving back to the community by giving jobs to 20,000 plus locals and giving them a means to support their families. Moreover, Chimori has a main focus of increasing their workplace safety as they took a more progressive action in 2023 by just making more catering restrictions and more training for employees, giving them a higher satisfaction rate and a focus on employee growth. Now, over at the governance segment, Chimori is a family business with 75% of the shares being owned by the Sutanto family. But looking over at the financial projections and the current BOD performance, we believe this won't pose any negative impacts as they continue to show positive growth over the years. Now, with that said, however, Chimori does have a massive issue with their transparency, and we believe that if they do increase their transparency and disclosure within their next reporting, this will increase their value and trust to future investors. Ultimately, Chimori is a premium, trades at a premium price, but we believe through our three main theses that Chimori is worth the price. And with that said, we, Pyrite Research, issue a buy recommendation to Chimori at a price of 6,650 rupiah target price and an upside of 34.1%. And with that, we, Pyrite Research, conclude our presentation. Thank you.
We will now begin the Q&A session. Judges, silence yours.
Okay. Thank you for the presentation. So, can we go back to your ESG slide? The 35 out of 100. Yeah. So, this is from 0 to 100, right? So, does 0 mean very good or 100 means very good?
According to ESG, 100 is the best.
100 is the best.
Yes.
So this is very interesting because the previous team before you, they all like have very high ESG, like 88, 90. So this is only 35. So if it's only 35, should we put a discount to your target price? Because it means bad, right? That's one thing. Second thing is going forward, does Chimori want to penetrate more general trade or modern trade? Thank you.
Okay, so going forward, as we've researched from our own live research, we believe that Chimori is targeting a more direct approach to general trade, with them going to releasing a new product as well, at the council sausages priced at 5,000 Indonesian rupiah, which will target more distribution by Ms. Chimori and targeting the general trades to extend their deeper market penetration and expanding their target demographic overall.
Okay, for the market penetration, we assume some new products, ya Pak, because Chimori growth is depend on the new products and their channel distribution. Okay, in the first, maybe I will explain about the new products. Canceller will launch about the new canceller single. Like this new canceller single is only sell to 5,000 rupiah. This is targeting to the middle until low income masyarakat gitu Pak. Jadi this is can be kayak boost to their general trade distribution Pak. Especially in about the
and this will of course increase their distribution as well, and we believe this would actually increase and maintain and could actually increase their market share as well, as with deeper market penetration and the new target demographic, we could see them soaring their market share even higher and higher.
Okay, maybe that's it for us.
Okay, thank you, teams. I would like to reconnect my questions to Pak Herman's question about your ESG score. You have chosen the ESG approach on assess the ESG analysis, doing an ESG analysis on Chimori. You, as Pak Herman mentioned earlier, that you've given a very low score on ESG compared to other teams, right? However, you have very optimistic price target. If you come up to your price target of 34% of the upside, this is quite higher to compare to other. So the inversion of the ESG scores and the target price. Do you think it's historically realistic to having a 34% in this for Cimori or the others in their peers? And secondly, how can you get the consensus of 108%? Thank you.
Okay, thank you for the question. Maybe I will explain about the Cimori will always meet the investor expectation, because if we see since Cimori IPO, they always grow double-digit top line. Like if we see the first quarter 2021 until now, they double-digit growth, and if we compare to the other competitor, they cannot grow like that gitu. Jadi Cimori right now they growth like 2 until 3 times higher than the competitors Pak in Indonesia, and 34.1%. I think this is reasonable for the Cimori, because the Cimori is the growth stock ya Pak ya. If we compare the other competitor is the value stock. Because of that, we believe that our target price is reasonable for the Cimori Pak.
And going over to the prospect of the ESG segment, and you said that the other teams have given them a higher ESG rating than us, and we choose the path of ELSG, right? Now, one of the key reasons as to why we've given them such a low score of ESG is mainly due to their lack of transparency and disclosure within their reporting, given us a very difficult time and actual factual evidence as to how to rate their governance and what they're actually doing to reach good corporate governance, and hence why we've given them a low score. But if they were to disclose all of their information and be more transparent as to what they're doing with their company and how to reach good corporate governance, we will be likely to give them a higher scoring, because good corporate governance will give us more reliability and trust to investors. Okay, that's all from us.
Can you go back on the slide about the growth that will be driven by processed food? Yeah, I think a quick question from me about the processed food segment. I think they have done quite well in the past, and Cimori has very good growth in the processed food segment. And how do you think this will sustain? Because compared to their other competitors like Charun and Java, they do not have upstream asset. So their cost base is should definitely higher.
Okay, so with them having zero upstream business, this could impose a significantly higher cost for the company, since, as you've mentioned, they don't have any production livestock in itself, so they rely on suppliers. But through having this zero upstream business as well, Cimori's commodities are easily accessed, and such as the powdered milk over here, Cimori does a 6 months forward contract, which means this could put Cimori at a safer place when buying and importing new powdered milk compared to other competitors, and they could give them time to assess when the prices becomes higher. And going over to processed food.
About the processed food, we believe that Indonesia can same the poultry consumption with Malaysia ya Pak. If we see the apa namanya right up chart ya Pak. In 2020, processed food is growth massively. Like if we see in 2080 until 20, itu growth only 0.0% CAGR. But after the pandemic and after the urbanization population growth, about the processed food revenue growth is massively growth in 24.9% CAGR, Pak.
I think one more question about that. I think the poultry consumption in Indonesia is low because the chicken is unaffordable because we require to use a local corn. How do you think we can catch up with Malaysia consumption per capita?
Okay, for the future, I think the freelance from Prabowo can drive the demand from the poultry industry, because if we see the market, the MBG of the freelance is drive the awareness of the healthy food, like eat some poultry meat or anything else. Because of that, we for the future we believe that Cimory can grow massively.
And with that as well, we believe that Indonesia's poultry consumption could have a significant impact as well, since, as Yogi mentioned, that through the free lunch program, a lot of awareness will come to other foods such as dairy and poultry, for example. And with that, we could see a significant rise as well to Indonesia's poultry consumption and growing exponentially, slowly but surely in the next years.
Okay, so for the addition of for our assumption that the Kementerian Pertanian and Peternakan and also give the Indonesia subsidiary for people in Indonesia, and chicken is most of the meat that have a lot of subsidiary by Kementerian. So we have a good perspective for the poultry industry in Indonesia. Okay, thank you.
Time's up. Let's give them a round of applause. Thank you, Pyrite Research from UPN Veteran Jakarta, for your presentation. Please be seated. Now, please welcome Ganesha Street Capital from Institute Technology Bandung.
Halo. Tes.
Ready, team?
Yes.
You have 10 minutes for presentation. Please pay attention to the timekeeper here. For the audience, please remain silent. The team, time starts when you start speaking.
Best way to win, to know and become your enemy. Hello, we are Ganesha Street Capital, and we believe we know Cimory well. That's why we issue a hold recommendation with a target price of 58 and 40 rupiah and 8% potential upside. This is due to the growth limitation with their supply chain, but complemented with their promising product portfolio. They also present X factor in Cimory's performance.
Everyone, do you remember these two viral snacks? These two brands are the main business segment of Cimory, characterized by the innovative product differentiation. Owned by the Stantio family, they produce and sell their goods mainly to Java and Bali. They won, but also lagged in several segments in a mature dairy market and in the growing processed meat market. So why exactly a hold recommendation? Let's deep dive into these three main theses.
Let's start from Chimory production and distribution. Distribution-wise, Chimory top two revenue drivers are from modern trade and general trade. And to understand further, we conducted an on-site channel visit. And the results show that modern trade sales are driven by dairy and consumer products, while general trade sales are mainly driven by dairy products. Looking deeper into MT, we're seeing that the MT growth is highly reliant on the expansion of the MT channel. This is further evidence with the stock performance shown. And also, Chimory MT penetration rate is almost 100%. Makes MT growth is highly significant for Chimory. However, with the Indonesian trade expected to slow down and several factors, we forecast the modern trade revenue will grow at 3.09% CAGR for the next 5 years. Moving to the general trade. To drive growth, Chimory is actively expanding its GT outlets due to its 8% penetration rate. However, with the new regulation in 2024, banning of cigarette sales nearby school could potentially impact 70% of GT's revenue. And also combined with the underperforming consumer products and rising online competitions. Therefore, we forecast the general trade revenue to grow at 3.57% CAGR for the next 5 years. And now move to the production. Chimory operates 3 dairy and 3 food factories. In dairy, capex to revenue dropped to 8% in 2023, signals a shift from expansion to efficiency. And with the utilization rate still below the industry average, Chimory needs to optimize before scaling further. Therefore, we forecast the dairy production capacity to grow at 2.9% CAGR for the next 5 years. And for the food production, Chimory has no significant expansion moving forward, and there's a decline in consumption growth. That's why we forecast the CF production capacity to grow at 7.9% CAGR for the next 5 years.
Now, we move on to our second thesis, the tiebreaker, Chimory's X factor. You've probably heard of Oreos,
Dicelupin.
or teh pucuk harum, pucuk. Yeah, this shows example how important marketing is for FMCG brands, and Chimory is no exception. Chimory's campaign on Candler with Nicholas Saputra made them widely recognized and helped them to compete with the top industry player. However, in the dairy industry, as you can see here, as its product and variety of product branding can lead to losing of consumer interest. With Indonesia Climate 2025, Indonesia Gelap and the effect of time, Chimory's hype-driven marketing becomes an even bigger X factor that needs worth watching. That's why we propose a 2 scenario. The first scenario is where Chimory is highly investing in marketing, and that can lead to more strong growth. And the second one, where the Chimory take a risk-averse approach, where can lead to stagnation. That's why, with both of them have the equal expected value, we believe that both of them, Chimory's next move can be something that worth to watching. The first scenario is likely to happen if Chimory is heavily investing in marketing and hopefully can generate more sales growth. However, in the second approach, as Chimory seems to take a risk-averse approach, Chimory might lose some growth launchpad. Now, we move on to our third thesis about the product portfolio. Chimory operates in 3 key segments in BCG matrix, and we believe with this product portfolio, Chimory can generate a healthy revenue both in short and long term. Now, let's see in consumer products. As we can see here, the RTE in frozen food market is growing, driven by the ongoing demand for convenience. While Chapin Meat leads the market, Chimory's 2023 strong growth creates a big opportunity to expand its market share. But why is it possible, Daniel?
First, its aggressive yet effective marketing has driven Chimory net sales growth at twice the rate of its competitor. Second, if we think about frozen food, what's on your mind? It's unhealthy and all the same, right? But here, Chimory's offer a unique flavor of their product that completely match with customer preferences. Third, if Chimory expand nationwide like its peers, they could capture even more market share. That's why we project consumer product revenue will grow at 5.8% CAGR over the next 5 years. Same opportunity also exists in milk market.
but even more crowded. To grow its customer base, Cimory must excel in 3 areas. The first one is price per milliliter. Second, nutritional fact. Third, taste and texture. By excelling in those 3 areas, has proven in increasing Cimory's market share by 1% annually. Moving on to yogurt product. Cimory's excellence in all aspects has made them dominate 70% of yogurt market share. Until now, they keep to innovate and collaborate with kids cartoon to raise brand awareness since a little. As a result, we project that the dairy revenue will grow at 3% CAGR over the next 5 years.
Okay, thank you for the thesis explanation, team. Now, moving on to the valuation. In dividing our target price, we use 2 different methods. The first one is the FCFF DCF method, where we projected a bear, base, and bull scenario based on our financial analysis. As you guys can see on the slide, our hold recommendation is based on a base projection with a 7.5% upside towards a 5.8 thousand rupiah target price, whereas our bull scenario projects a 17% upside into a buy, and our bear scenario projects a minus 12.5% downside into a sell. For the other method, we use relative valuation approach, particularly a PEG ratio, to compare Cimory with its peers. As you guys can see as well, Cimory has been trading in a premium level compared to their peers, even over the industry average. This shows how much the investors are valuing the company, which we expect that the trend will continue towards 2025, albeit at a potentially slower scale compared to the previous years, which puts our valuation or target price into a 5960 rupiah on a hold basis. Our hold judgment is also supported by 2 different simulations. Taking into factor other valuation metrics as well, we put our target price for Cimory's hold call on 2025 into a 5840 rupiah with an 8% upside potential. The result is a combination of both the intrinsic and the actual conditions of both the company and also the market, with an 80-20 basis to put more emphasis on the actual company's financial drivers.
There will always be risk in every investment. We have identified 2 main risks for Cimory. The first one is the volatility nature of raw material price, as half of Cimory raw materials are imported. To mitigate this, Cimory had bought imported raw materials with 6 months forward contract. However, the uncertainties exist due to unpredictable demand from China. The second one is competition. The competitive nature of Cimory's industries are oligopolistic, even monopolistic. Cimory had attempted to beat the competition through its product innovation and creative marketing strategy. However, the rivalry remains hard as in 2024, 2 new flavor for milk products can only up 1% their market share.
Moving on to the ESG analysis, by using the MSCI assessment framework, we can conclude that Cimory ESG rating is at AA. Moving to the environmental, Cimory has a strong waste management with a 99% recycling rate and efficient use of energy. However, its wastewater management requires attention. Moving to the social, Cimory ensures a high safety, no fatalities, and contributing through Miss Cimory scholarships and farming training. However, the proportion with the disabled employees and female senior managers requires attention. As a strong family business, Cimory supports sustainable growth and also maintain a good institutional dynamics. However, its ESG risk rating is increased from low to medium, requires further attention and improvement. And with these 3 theses, we believe that Cimory worth the wait and see. That's why we, Ganesha Street Capital, reiterate our hold recommendation. So, can we win the war? Let's wait and see for the next 4 months. That's all from us. Thank you.
We will now begin Q&A session. Judges, time is yours.
Thank you. Can you go back to the slide about the milk business in the thesis 3? I forgot which number. I think you mentioned that Cimory has a good product, good price, and they can be successful in the milk business. But I think in the past 3 years, market share of them is still weak. Why do you think they can be successful in the milk business? And second question about the first thesis about the distribution. I think you mentioned that the distribution network is quite limited. The growth opportunities is quite limited because the distribution has hit the peak. But there are two types of how to increase market share in FMCG. First one is increase the distribution, and second one is increase the sales velocity, which get the consumer to buy more product. Why do you think Cimori cannot do the second one? Thank you.
Okay, thank you, judges, for the questions. Maybe I'll like to answer the first question first about how the Cimori HT milk especially can win the market. As we can see here, the milk market is actually super saturated with a lot of competitors. However, Cimori has a good performance in 3 parts where that they can expand 1% market share each year. And with this product, actually the first thing that why the product can actually grow in significantly with the market is actually the product is actually match the consumer preferences. As we can see, they actually over a lot of number of variants and also suitable price for the market as they over price and also taste and texture. So as you can see here, the most competitive positioning of the brands is where they over 16 variants for the OHT milks. And this is actually quite perfectly matched with consumer preferences since they actually value price and also taste and variants in this industry.
Yeah, a lot of product doesn't mean that consumer are going to buy them. So what do you think?
Actually, I want to add up something. Can we go to appendix number Jackpot survey? Here on appendix E15, we can see that actually price is not the only variable that customer consider when buying product. They consider 3 variables, which is price, nutritional facts, and taste and texture. And in terms of number of variants, it match with the third variable, which is taste and texture. So that's why in terms of milk industry, we believe that number of variants in milk products will boost Cimori market share.
Okay, now moving on to the distribution channel. Maybe if we can go to appendix, let's see. Wait. Okay, so if we see from this, and taking into account Cimori's 100% penetration rate into the MT channel, and we also see that Indomart and Alfamart have the most store counts in Indonesia. And we can also see that Cimori's revenue, recurring revenue, is from Indomaret and Alfamart with a 23% and 14% of sales, respectively. So our key takeaways here is that MT growth is really impacting the Cimori's sales. But why not the more frequent buying from the customers, right? So I think to further strengthen our argument, we see that the demand, we observe that the demand for dairy industry is growing at a very stagnant or stable growth of 2% each year. So we believe that that will not be the case for the dairy. And also for the consumers, if we can go to the slides, consumer food thesis 1, we also notice declining growth for consumer food consumption post 2026. Yeah. Here, so the growth is slightly, extremely declining to around 2% each year. And so we believe that even though complemented by also the stagnant distribution network, complemented also with a stagnant demand and also stagnant consumption, we believe that will not be the case for Cimori.
And now actually answering on the GT perspective, so there's 2 reasons. The first one is that we're seeing the new regulation on the banning of the cigarette sales nearby schools. Why would that impact Cimori a lot? Because Cimori now is actually shifting to expand more on the GT channel because they now only have 8% penetration rate and they're aiming for 20% YOY increase in the general trade, right? However, with the 8%, there's still 92% penetration rate that we can try to go, right? However, because the GT's revenue itself, 70% relying on cigarettes, while 30% relying on the other essentials product, one of which Chimori, we believe that it would be hard for Chimori to actually tap into this market further because we might question about the relevancies. Can they actually cater the growth moving forward with this or not? That would be the first one. And second one is actually talking about the GTs. As we know, the Chimori's growth is basically driven by the consumer food, right? However, the problem here is that after conducting an offline checks, okay, I think I can explain by myself. So we actually see that the reasons why GTs cannot sell the consumer products is because of two things. The first one, their refrigerators is used for selling a milk, and they cannot actually sell a freezers. They can't actually utilize the freezers because there's a limited electricity supply, and that's why if they're aiming for providing RTEs and RTS, it would be very significant. It would not be significant for them because they even have a problem with the supply in terms of electricity cost and also coming from the customers around them, surrounding them. The profile is not that big. So that would be the reason why we believe that the growth would not be significant from the GT and MT perspective. Thank you.
Thank you.
Thank you. First of all, congratulations for initiating the whole recommendation because you are different than others. That's first thing. And then second thing, thank you very much for having a page number in every slide. It's help us to tracking the presentation. Regarding your whole recommendation, which is different than others, and you have mentioned the slide 62, right? You combine the 80% of BCF with the 20% of EEG. And my question is, please elaborate, what stops you from issuing a sell recommendation? That's first thing. And second, on the 661, it's very interesting that you are using to complement the Monte Carlo with the geometric Brownian motion Monte Carlo as well, right? So can you explain why you use this GBM for complement the Monte Carlo? And I think that's my two questions. Thank you.
Okay, so thank you so much for the question. I think I would like to take for the first question. So the reason why we're not going for the sell, but instead of hold, because of two buckets. The first one is basically because of the innovation that I have. And second is actually more into the government instability. First one, regarding the innovation, we believe that Chimori, currently, why they're actually going into a downside trend is not because of their business fundamentals. It is because it happened throughout the whole industry. There's a negative sentiment from the customers. There's also, a political instability, and that would be the reasons why this downtrend is not only happened by Chimori, and it will not be one of the key considerations for us to now sell or buy. That would be the first one. And second is, still on the first one, innovation. And also we're actually awaiting for around 3 months from now, where we actually see the trend. Chimori is constantly providing a new innovation around Q1 to Q2. And we're going to see about how this new innovation would reflect on providing a new momentum and whether would that actually satisfy the market or not. And then move on to the second bucket, it's more into the government instability. As per our understanding, we actually see that the presidential election has just been done around a year ago, and the transitions has just been around 3 to 4 months. While it cannot actually give us a further confidence about whether should we buy or hold based on the regulations. And after we have a further historical data, we understand that the best way for us to understand whether should we go for sell or buy is 7 months after the presidential first initiation. And with this being said, 4 months from now would be our key time for us to understand should we go sell or buy by looking at the regulations, the political stabilities, and commodities prices around the year. That would be the first question, the first answers.
Time's up. Let's give them a round of applause. Thank you, Ganesha Street Capital from Institute Teknologi Bandung for your presentation. Please be seated. Now please welcome the last team, Fortis Capital from Universitas Indonesia.
Oke, udah masuk. Thank you. Tolong antri ya.
Please welcome Fortis Capital from Universitas Indonesia.
Mic check. Check.
Ready, team? You have 10 minutes for your presentation. Please pay attention to the timekeeper here. The timer starts when you start speaking.
Ladies and gentlemen, most of us know Chimori for their signature yogurt, but they've taken it to the next level. As an innovator and disruptor, Chimori is reshaping the industry with game-changing product backed by strong management quality. We are Fortis Capital, and we proudly present our buy recommendation with a 28% upside potential. Our investment thesis is built on 3 factors. First, robust demand outlook. Second, resilient revenue growth. And lastly, sustaining margin to further growth.
First, what is Chimori and why should it be on your radar? Chimori isn't just one of the biggest dairy companies in Indonesia. It's a company that continues to innovate and expand. With a proven track record of capturing new market while staying resilient, we believe that Chimori's dominance will continue due to 3 key factors. First, Chimori has been diversifying into the consumer food segment, reducing risk while unlocking new growth opportunities. This is reflected by the revenue mix, where consumer foods has now outpaced the dairy segment. Second, Chimori benefits from strong leadership, with the second generation of its founding family leading the company, ensuring continuity. This is balanced by a highly experienced board of directors. This leadership has positioned Chimori as a driving force of innovation and disruptive growth in the industry. Lastly, Chimori operates a vertically integrated mid to downstream business model, giving it full control over its distribution. With Miss Chimori as the backbone of their direct-to-consumer strategy, alongside multiple DCs, branch networks, and cold chain capabilities, Chimori maintain an extensive reach, ensuring product quality and product freshness.
So now we will begin by exploring the demand factors. The industries which Chimori operates are set for substantial expansions in the coming years, even achieving double-digit forward CAGR in 3 out of 4 industries. We believe that this is due to 4 factors. First, Indonesia's milk and meat consumption is significantly lower than that of its peers, even compared to Vietnam with a lower GDP per capita. This highlights a huge untapped market and a strong growth potential. Second, rising income will certainly play a factor, as Indonesia's GDP remain resilient despite recent economic downturns. As households earn more, they will demand more for milk and meat consumption, given their strong correlation. Third, as education improves, people gain greater awareness of nutrition and potential income growth. Empirically, this has a strong and positive correlation to dairy and meat consumption. Lastly, on the consumer foods, the markets will lean towards demanding more practicality, driven by increasing urbanization and rising family labor participation.
Growing income and urbanization are set to empty expansion in Indonesia. With 47% of its sales contribution, Chimori is ready to grab this opportunity. However, Chimori also has a plan to increase its GT presence. One challenge in GT penetration is cold chain capability. To address this challenge, Chimori has implemented their vertical integrated distribution and also plan to expand their chiller. To further strengthen its GT penetration, Chimori also has a well-positioned product in the market. From our survey, we can found that the higher product quality is the main reason why people choose Chimori product. Compared to its competitor, Cimori stands out by offering a wide range of flavor variety and always prioritizing their premium ingredients. Even so, Cimori offers its product at a more affordable price than the similar product, which will help them in GT penetration. And they promote its product using ATL and BTL marketing strategy. And they're also using appealing copywriting to create a buzz across social media. Their strategy successfully increased its brand visibility and also built curiosity among people. Their marketing strategy make they have a A&P spending compared to its peers. However, they have delivered stronger top-line growth. Their strategy will drive their revenue with 15% CAGR backed by increasing capabilities.
Besides strong demand and revenue growth, we also believe that Cimori will maintain its strong margin. Currently, Cimori cost of sales is heavily driven by its raw materials, with consumer food contributing slightly more than the dairy segment. One key challenge is that the majority of milk powder is imported, making it highly volatile. However, it is expected that the price will stabilize in the future. At the same time, this volatility will also be buffered by the high sales volume of consumer food, which has the second highest GPM among Cimori's segment. This will make Cimori has a robust GPM of 44%, which is way higher than their global peers average, both in the consumer food segment and also the dairy segment. This strong performance will further strengthen Cimori's balance sheet with an increase in cash and also a high net cash position, especially considering that they have fully paid all of its interest-bearing debt. As seen on this chart, you could see that Cimori has the lowest net debt to equity ratio, an indicator of a strong financial stability. Cimori also have a strong capability on generating free cash flow, which is backed by its management effectiveness in cash conversion. Its cash cycle is way better than the global industry's median. This positions well for Cimori for expansion. Its ROIC is way better than both its WACC and also the global peers average. All in all, everything that we have discussed so far from thesis 1 will help Cimori to maintain its growth strategy. With a strong cash flow, Cimori can invest more on their marketing and distribution, boosting top-line growth and market share gain. This will fuel a continuous cycle of reinvestment and expansion.
Finally, we arrive at our buy recommendation presenting a 28% upside potential with a targeted price of 6,267 rupiah. Our targeted price is combined between 60% of DCF valuation and 40% of relative valuation. Our DCF valuation is derived by three key theses: robust demand outlook to determine our terminal growth, resilient revenue growth as a benchmark to set Cimori's earnings forecast, and sustaining margins that leads to higher amount of pre-discounted free cash flow. Our DCF valuation is derived by 10% WACC, consists of 10% cost of equity, and insignificant cost of debt due to the debt-free company, and also 5% of terminal growth. We also conduct market check through PE valuation, derive the price using 1 year mean historical, and reflecting a 29% upside potential. Despite Cimori having a premium valuation, Cimori excel in their profitability metrics. The performance is 2 times higher than their peers in ROE, ROA, and EPS growth. Lastly, we arrive at our blended valuation, representing a 28% upside potential with a forward PE of 27 times. Even in our worst case scenario, we still imply a stable hold. We also conduct a sensitivity analysis using 4 variables and still resulting in a buy and hold recommendation.
There are several key risks for Cimori business. A 3% increase in raw material price can hold our valuation. However, Cimori can mitigate this by purchase their raw material 6 months forward. An intense competition can decrease their demand. A 3% decrease in their demand can make our valuation to hold. As a segment innovator, we believe Cimori can mitigate this risk efficiently.
When it comes to SG performance, Cimori is setting the standard for the Indonesian market. Our team conducted an ESG evaluation using the MSCI framework and categorized Cimori at the AA category, remaining strong and competitive compared to the global landscape. In the environmental aspect, water stress and packaging waste is a major concern. To address this, Cimori has been integrating recycled rainwater into their production process. The company has also reduced their packaging weight to press upon plastic waste with further initiative of exploring other packaging materials. In the social aspect, the company upholds strict industry standard with several certifications and 0 work-related accident. The company is also an early adopter of a lactose-free lineup, showing their agility to respond to the market preference. Lastly, in the governance aspect, the company Family Business Foundation fosters stakeholder trust, while the balanced BOD ensure professional growth. The company also upholds high business ethic, featuring a whistleblowing system, wage above the minimum, and comprehensive maternity leave. All in all, we reiterate our buy recommendation of a 28% upside potential and a target price of 6,267. Investing in Cimory means more than just owning a stock. It's investing in Indonesia's fast-growing consumer market and in a company with strong brand loyalty and high potential for expansion. Thank you. We are Fortis Capital. Now we are open for further questioning. Thank you.
We'll now begin the Q&A session. Judges, time is yours.
Okay, thank you for the presentation. So, okay, this is a hypothetical case here. If Indonesia is gelap, yeah. So going forward, your margin forecast is it flat or increasing?
We actually forecast that it will be stable at the 44% level.
So like because like we know that the excess saving for the Indonesian people are already negative actually. So with like so many challenges facing us, do you think the margin is sustainable? Maybe it's too high, maybe?
We actually do believe that this stable margin of 44% will still continue until the future. And the one key driver of this high margin is largely due to the stabilizing of raw materials. So maybe a bit of background first. The raw materials for Cimory is largely driven by its poultry and also milk powder. And for poultry, since it is majorly locally sourced, it is heavily monitored by the Indonesian government, hence making the price less volatile. And the second one is for the milk powder price. It is more fluctuative. However, since its peak in 2022, we actually can see that the price actually has been decreasing. And this decrease of price is largely because of the decrease of demand from China, who is actually the biggest consumer of milk powder. And we believe that it will remain in the same level. Hence, because of the stabilizing raw material price, we believe that the GPM will remain stable. Thank you.
Okay, 2 more questions. So, do you have like the trend of the capex per revenue and also the R&D per revenue?
We actually do have the capex, but for the R&D per revenue, since Cimory doesn't disclose it, so we do not put on our presentation. For the capex, so here is the historical capex of Cimory from full year 2021 until our forecast in 2030. And as you can see, they have a trend where they only have a significant capex every 3 years. Thank you.
Thank you. One thing that I like to add something here is that I'm afraid that the presentation on ESG aspect is something that nice to have, right? So I will ask you a question about how do you explain the impact of the ESG assessment to the bottom line of the company and the premium, and yet you put upside premium target of your price. That's my first. Second, that we are aware that the Cimory is very savvy in marketing, right? Using media social and key opinion leaders. So can you explain to us, is there any ROI metrics that you can relate to connect the marketing activities to the bottom line? Thank you.
So for the ESG, yes, Cimory is very committed to ESG. Maybe what I was presenting in the ESG aspect is more of the nice story, but the ESG of Cimory itself have opportunity costs. For example, if we go to our presentation and ESG. Okay, essentially, Cimori also every year Cimori invested money into improving their ESG aspect, showing that their commitment and they're willing to do opportunity costs to improve their ESG. For example, the numbers of 2023, Cimori invested 2 billion in energy reduction efforts and 16 billion in waste reduction effort. They show their big commitment on ESG and shows that they really care about their ESG. And their ESG itself is where it's directly monitored by their CFO. And compared to the domestic market, as you can see, Cimori is leading the domestic market in one of the metrics, monitoring task statistics, with a high gap. So yes, Cimori is very committed to ESG, but we do think that they have room for improvement. And relating to your second question,
we would like to clarify regarding the premium valuation. Can you repeat the question?
Can you measure the contribution of the marketing ROI to the marketing strategy of the Cimori to your target premium upside?
Okay, so
thank you.
Okay, thank you, Pa, for the question. So for the marketing strategy, actually they don't disclose the marketing ROI to their sales, but we do believe that their marketing strategy have a big impact, as we can see in thesis 2. We already compare the A&P spending and the revenue growth for Cimori is higher than its competitor. We choose two competitors here and shows that the higher A&P spending not lead into the higher revenue growth. It's only applicable in Cimori.
Maybe I would like to add. So just like we have mentioned before in our third thesis, that they have a growth strategy, right? With a high revenue growth, they actually reinvested again to their A&P spending. And if the A&P spending has been increasing their marketing effectiveness, it will actually drive their top line growth. Hence, we believe that it affects our premium valuation.
Yes, so how the top line growth can adjust the premium valuation. So Cimori is currently in a high growth industry where the growth is reaching double digit, especially in the revenue. So that's why Cimori is currently traded at a premium valuation. And one of the top line growth is boosted by market expansion and also product innovation that is backed by their marketing strategy. Thank you.
Can you go back to the slide 22 about the I think in the thesis 1 about the premium brands of Cimori. Yeah, I think you mentioned about that Cimori has a competitive advantage as a premium brands and they has a lot of product variety. But as we know, Cimori is expanding in the general trade and with the Miss Cimori. How do you reconcile that with your thesis? Because if the premium product doesn't fit with the GT segment and the high number of SKU can increase the operational complexity. Thank you.
Okay, can we go to thesis 2 where there is price per product? So yeah, Cimori is being, I guess, marketed as a premium product, right? But they also want to expand in their general trade. They do this by doing innovation. First, I have to emphasize that they integrate the innovation into their growth strategy in their company presentation. So what does that mean? They are committed to doing innovation. What kind of innovation that can boost the GT expansion? Cimori has consistently innovate product where it is more affordable. For example, the yogurt, they innovated with a yogurt stick. So it's more smaller and it's more affordable, and it will reach more market in the GT penetration. And also one of their key growth of significant expansion since 2019 is the ready to eat sausage, right? But they have innovated this further. Can we go to the product number? Yes, slide before. No. Yeah. as you can see, at 2024, they even created a more smaller ready-to-eat sausage. What does that mean? This shows that their management quality. If they want to expand to the GT penetration, they know what the market wants. It is a more affordable product, right? So we can see that they are able to respond to this.
How affordable that product compared to the one in the market, compared to the option that is available in the market?
Okay, we actually have done the comparison.
F number two. Number two. Next. Yeah, this is the comparison. As you can see, Cimory has usually two products, right? And they innovate by launching a new product that is more smaller. For example, in their yogurt drink, they have a 240 milli of yogurt and also 200 milli with a significant lower price to able to penetrate to this more affordable market.
Okay, and maybe I would like to add about your cold chain capabilities on penetrating in GT. And like we have all known that penetrating in GT is way harder, especially for a chilled processed food and also freezer, especially given that there is a limited of freezers and chillers on this general trade, especially in the rural market. However, we believe that there is a significant opportunity for
Time's up. Let's give them a round of applause. Thank you, Team Fortis Capital from Universitas Indonesia for your presentation. Please be seated. Thank you all, team. You all have done great this morning. You all did a great research, and I really enjoy all the presentation. Thank you for all your hard works. And we'd also like to express our sincere gratitude to our esteemed judges here. As a token of our appreciation, we kindly request your acceptance of this acknowledgement. Therefore, we invite Mr. Triyono Sidirjo, CFA, to present the token of appreciation to Mr. Tigor Siagian. Please come forward, Pak. Secondly, we would like to invite Mr. Ari Sutijo, Mr. Ari Vitoyo, my apologies, Ari Sutoyo, to present the token of appreciation to Mr. Herman Cahyadi, CFA. Please remain on stage, Pak. Pak Ari, please remain on stage, Pak. Pak Ari, please remain on stage, Pak. And itu lagi wonderful, Pak. We'd like to invite Mr. Raja Aulia Reza Abdallah, CFA, our esteemed judge. Like to invite all the judges to come forward, to invite all teams and faculty advisor and mentor for a group photo. Thank you, ladies and gentlemen. Lunch is now served. Please enjoy your meal. For judges, we kindly invite you to proceed to the meeting room to determine today's competition winner while enjoying your lunch. We request everyone to reconvene here in 30 minutes for the announcement of the winners. We request everyone to reconvene here in 30 minutes for the announcement of the winners. Thank you. Ladies and gentlemen, the moment we've all been waiting for, the announcement of the winners have come. Deg-degan? Let's give a round of applause to all of us. Judges have made their decision and we are excited to reveal the results. But before the announcement, we'd like to invite Mr. Raja Aulia Reza Abdallah to represent the judges for a brief sharing session, Pak. Pak Raja also acted as a mentor of our previous champion 2 years ago in the global competition. Okay, please welcome Pak Raja.
Thank you. I think we already discussed, and Pak Tigor and Pak Herman already delegates me the opportunity to share with you about our view. I think this is because I'm the one who was selling milk actually. I have a business on selling milk, so that's why I think Pak Tigor and Pak Herman, give me recommendation to tell you about our view. I think this is a quite hard we spent about 30 minutes to discuss about the judge, and it's very close about the top three. It's very hard to decide. Even we have quite a material different opinion, and but basically what we think is that important is, one is the delivery of the presentation on how you convince the judges about your investment recommendation, and also second one on the Q&A, how do you respond to the Q&A. And I'm sorry for the question that I gave today. Yeah. And and something related also on the CFA Institute on the ESG part. I think ESG is something that we as an CFA Institute is highly, we highly, something that is we highly support. So ESG is standard that we have to maintain, and we see a lot of on how people in the university and the students understand about the ESG. So I think that's it, and we are already available if you want to add something about more details explanation about the material, about the result. And we can have a one-on-one discussion after this meeting. Thank you very much.
Thank you, Pak Raja, for the sharing session. Now we come to the announcement. I'd like to invite Ms. Vivi Handoyoli, CFA, to present the token of appreciation too. Seventh winner is Pyrite Research UPN Veteran Indonesia. Please come forward. Please come forward, Pyrite Research. Appreciation, 2 million rupiahs for the seventh winner. Let's give a round of applause and please remain on stage. Miss Vivi, please remain on stage. And I'd like to invite the sixth winner is Adabor Capital, EP Institute. Congratulations. Congratulations, Adabor Capital, and we've come to the fifth winner is Ganesha Street Capital from Institut Teknologi Bandung. Okay. Okay. Thank you, Miss Vivi, and thank you for fifth winner. And I would like to invite Mr. Ari Pitoyo, CFA. Mr. Ari Pitoyo, CFA is a commissioner of the CFA Society of Indonesia. Please come forward, Pak, to give token of appreciation to the fourth winner, which is Luwih Capital from Universitas Surabaya. Just pray that you will be called last. Okay, please remain on stage, Pak. And the third winner is Fortis Capital, Universitas Prasetya Mulia. Okay. Please come forward, Fortis Capital. And I guess like there is excitement here for not being called. Excited for not being called yet. Okay. I guess we already know who's the winner. Okay. Thank you, Pak. Makasih. I guess there is no surprise anymore. You guys already know. Okay. We already know and would like to invite Mr. Triyono Sudirjo CFA to present the token of appreciation to Fortis Capital, Universitas Indonesia, as the champion. Please come forward. Satu dulu, Pak. Oke. Dari UI, Pak. Universitas Indonesia, Pak. Ya. Fortis Capital as the champions from Universitas Indonesia. Congratulations, our champion. Congratulations, the champion. And okay. Lastly, our first runner-up. There's no surprise. PSB Elites from Universitas Indonesia. Mr. Triyono. Okay, congratulations to the champion and our first runner-up. Okay, please be seated. You will proceed to the sub-regional level competition. Congratulations to all the winners and participants. We truly appreciate your hard work and dedication. Thank you for our sponsor, Stockbit, Bibit, Sukor Sekuritas, Saya Kaya, and Kaplan EduPack. That concludes our event today. Thank you all for joining us, and we hope to see you again next year.